strategy.
This is the Asia Trade.
You're watching The Close. Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
The biggest day of gains of the month on the S&P 500 so far in yesterday's session. This morning, just about unchanged on the S&P. And the bond market, Treasuries rally, yields drop. We're down to 422.71. Under surveillance this morning, a tax fight on the horizon.
So we could talk about Kamala Harris's position on taxes, but frankly, she wasn't on any of the relevant committees to be a tax policy expert, and she doesn't have the authority via the Constitution to write the tax bill in the first place. If you're focused on, what is the platform going to be, call up the House Democratic Ways and Means Committee members. They already wrote this bill, and they published it several years ago, and it is, signed, sealed, delivered from the Democratic Party, ready to go to Kamala Harris, where that's the platform she's going to pursue on the tax front.
Here's the latest. Kamala Harris hitting the campaign trail later today, mapping out her economic agenda with Donald Trump's 2017 tax cuts set to expire at the end of next year. Ian Shepherdson of Pantheon Macroeconomics writing this: we assume part of the tax cuts will expire next year, but that the revenue raise will be offset by increased spending. In this scenario, inflation still falls throughout 25, dipping below the target in the second half, prompting much faster Fed easing than either the markets or policymakers expect. Ian joins us now for more. Ian, let's get straight into that. We'd like the numbers. When you say more than the markets and policymakers expect, how much more? What are you thinking about?
Oh, potentially quite a lot. I mean, I think that the Fed is late. They need to be cutting already. They should have started cutting some months ago. I think that the inflation picture is much better than they think. It's going to be way lower than the forecast that they made only back in June. So I think they start in September with 25. Then I think potentially we get another couple of moves before the end of the year, maybe 50 in November and December. And then I think they're cutting all the way through 25. And I think the argument in 25 is, how low do we need to go to prevent inflation falling too far below the target that sub 2% expectations become embedded? So I could easily see them cutting by more than 100, maybe a 150 further in 2025 after cutting more quickly in the second half of this year. So yeah, we're pretty aggressive on this, but it's really driven by the inflation forecast.
Ian, assuming that part of the 2017 tax cuts will expire next year, assumes that you think you have a sense of the makeup of the White House and Congress. What is their base case to get to this result?
Well, no, I don't have a sense of how it's going to end up. I think anyone who claims to know what's going to happen in November is delusional. But I think you have to assume something when you're making a forecast. So as a starting point, more than 100 days before the election, I think the only sensible starting point is to say that there will be no big policy changes. If by the time the election is much nearer and we've seen a lot more polling, it's blindingly obvious that things are going to go one way or the other, then obviously you have to change your forecast to reflect the most likely outcome. But after the events of the weekend, everything is completely up in the air. It's a week ago, looking at the polling, it was becoming much harder to have an assumption of no change in policy after November, because it seemed quite likely that President Trump would be back in office and that Republicans would take both the House and the Senate. Now, in that environment, you're going to get very different policy. And I was just on the verge of thinking, well, our base case forecasts need to change to reflect this when we get President Biden announcing that he's stepping back and everything changes. So now I think you could generate 100 different scenarios for how things would work out politically. That makes no sense, given that we just don't know. So assuming unchanged policy, that's what drives our inflation forecast and our interest rate forecast for now, but it may well change a lot.
Ian, just from a logic perspective, I'd love your idea on, regardless who wins, the deficit's still a concept that people are concerned about. We're still looking at the indigestion occasionally at certain bond sales. We're still seeing some forecasts that actually inflation will increase as a result of fiscal spending on an ongoing basis, regardless of who wins. Why is that not inflationary? Why do you see ongoing disinflationary even in that environment?
Yeah, well, it was inflationary. With the benefit of hindsight, the stimulus late in the pandemic was too big, and it precipitated a really enormous increase in retail margins, which was a direct push-up on inflation, very substantially. But that's now pretty much over on an incremental basis. Remember, when you're looking at the impact of the deficit on economic growth and inflation, you have to look at the increment, not the level. And the deficit now is pretty stable. It might even fall a bit next year, depending on policy changes after November. But what it's not doing is jumping higher as it did during the pandemic, and triggering that part of the increase in inflation during COVID and afterwards. That element of the inflation story now is greatly diminished. So assuming fiscal policy carries on as it's currently written, which may change, but as it's currently written, I don't see an incremental inflation threat from fiscal policy. I see actually margins beginning to recompress back towards normal. It'll take a long time, but they'll get there eventually. And at the same time, of course, we've got a significant weakening in the labor market. We've got slower wage growth. We've got no real threat from global food or oil prices, and all the supply chain chaos during the pandemic, that's pretty much done as well. So I see a very benign inflation environment, but I can understand why the Fed has been so cautious after the whole transitory fiasco, that they want to be absolutely sure before they start easing. Yeah. But I think I'm getting close to the point where I think they're too late now.
So, Ian, there are people who are watching this who are throwing things at the screen, and I know because sometimes they call me up after the show, and they say, how can people say that this disinflation is going to be sticky? Because what you're seeing in a lot of corporate health pictures is a very strong, robust economy. We just had GM reporting better than expected earnings, record revenues, looking at big sales of major products. How can you say that this sort of disinflation, A, is going to continue when there still is this consumer spending and the pent-up demand, and B, when some people would argue that the disinflation we've seen so far has little to do with the Fed? It has all been simply a normalization after the pandemic.
Oh, I've got some sympathy with all of those views. I want to make it clear, I don't think that inflation is collapsing. I just think it's on a sustainable, substantial downward trend. And let me come back to the point you made about not being due to the Fed. I think that's been true until very recently. But now we're in an environment where actually the lagged effect of the Fed's actions are beginning to kick in. Consumer spending has been much weaker. It's grown in the first half of this year, but at a much slower pace than it grew in the second half of last year. And that's a really material change in the environment. It's not a rollover. I don't have any sort of recession as my base case forecast, but I do have quite a sustained period of significantly slower growth, because the interest rate squeeze on the small business sector in particular, and very different to what's going on at GM and in the S&P, but in the small business sector in particular, the squeeze is quite intense. You know, small businesses across the country employ roughly half the workforce, and they're paying about 9% for their money. It's a very, very aggressive squeeze on them.
Ian, only got a few seconds left, so just need the number. What's your forecast for unemployment year end?
4.5, 4.75, clearly higher than it is now. Not disastrous and still low, but heading in the wrong direction and telling the Fed to ease.
And much higher than where the Fed think it will be, that's for sure. Ian, thank you, sir. Ian Shepherdson there, Pantheon Macroeconomics. The Fed has got unemployment of 4% year end. The difference between 4 and close to 5, I have to say, that's a big difference. You start pushing 5, you'll get those bigger recession calls from pretty much every single economist on the street.
This is a reason why Thursday's jobless claims actually matters quite a bit, whether it was just sort of noisy that we saw the continuing claims last week rise to the highest levels going back to 2021, whether this was Beryl and some of the implications of the hurricane, or whether this is a gradual and then gradually faster weakening in the labor market.
How much weakness is there? Dow to say things aren't great, and GM says things are pretty good. We'll talk about that in a moment. Up next on the program, Ed Yardeni of Yardeni Research, Democratic Congressman Jake Auchincloss of Massachusetts. We'll catch up with Bloomberg's Guy Johnson and Jill Kerry Hall of Bank of America from New York City. This is Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Changing our election odds. We're not calling for a major market correction. We could see a stalling out of the Trump trade.
Whoever wins, we're still going to have a deficit. We're still going to have high government spending. We're still going to have the same problems that we've had.
Regardless of which party wins, we're looking at big fiscal deficits as far as the eye can see.
We're going to be looking at a different path for inflation under Republicans than Democrats.
The reality is this is a big pocket of uncertainty.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The 3 pillars of this program over the last month: the politics, the economic data, and now the earnings. Let's talk about the earnings. After the closing bell, a little bit later, big tech kicks off. We're here from Tesla. We're here from Alphabet. This morning, already hearing from these 3. And if you wanted a clean read on earnings in America, I can't give you one. GM right now. People are buying trucks. Might not be buying flights, apparently. Not paying up for those, according to the airlines, but they're buying trucks. GM's up by 3.8%. UPS, I think the word you might hear from Lisa in a moment is idiosyncratic. And as for Coca-Cola, the numbers were pretty good in the face of Pepsi numbers, which weren't so good. So, Lisa, those 3 names, let's make sense of earnings season this quarter.
Well, good luck. I think that what we're seeing right now is that the soft data is as confusing as the hard data, that you can make a story depending on what company you can look at, and then you look at another company, you get a different story. Let's dig into it. UPS has been dealing with a new contract with its union that has really kind of tied its hands and sort of led to a whole restructuring. One of the reasons that they say, actually, we're on the upswing here. They reported a real decline in earnings, something like 30%. That's bad. The shares are down. What you see in GM, record revenues in the first half. This comes as there are increasing reports about dealers discounting cars and trucks to move them off their lots. Make sense of that. And then Coca-Cola coming in better than expected. Again, it is confusing out there, even if you listen to what the companies are saying.
What a pivot from GM back to the traditional business. The week ahead for earnings. Take a sneak peek of things. This is what it looks like. So you'll hear from Tesla, you'll hear from Alphabet, then the rest of the Mag 7 report. We'll hear from Microsoft next week. We'll hear from Meta, Apple, and Amazon. And then the big one, you've got to wait until the back end of August for NVIDIA. But that's where the focus is going to be for this market at a time where many people over the last few weeks have been entertained, enticed, seduced by this massive rally in small caps.
At a certain point, it all comes down to the nuts and bolts of what big companies are doing. And what we've heard from guest after guest, we'll continue hearing from more guests this hour, is that the big companies will do better regardless of what happens, regardless of who's in office, and frankly, regardless of how much the Fed cuts rates. If they cut rates a lot, that might help smaller companies, except it means that the economy is in the gutter. And if they don't cut a lot, that means that probably bigger companies have a better go at it than smaller companies. This week, more than 20% of the S&P 500 is going to be reporting. I'm wondering if this is when we actually see the pivot away from the noise to what actually is happening.
The noise on this program means politics, so let's talk about the politics. Let's start with the numbers, though. Since Sunday, in 24 hours, $81 million raised by that campaign for Kamala Harris, at a time when the money had completely dried up. Donors had stepped back from the president, Joe Biden. That was the first 24 hours. The last couple of days since Sunday, more than $100 million. AMH has been raised. That's quite a haul.
And 60% of these, it's their first time donation into the 2024 cycle. I think that's what's interesting. People are feeling a little bit of excitement that she's going out to. But donors, obviously, the past month, Jonathan, to your point, they pretty much just evaporated. Because why? No one knew if they were going to be donating to a campaign to nowhere. There's lots of calls for the president to step aside and not seek re-election. So she has this revamp, this restart. A lot of questions remain. She's going to get the nomination, it all looks but likely. They're going to likely bring up the virtual roll call, so they go in with a ticket to August 19th. But how does she reestablish herself? And because she's attached to Biden, is that going to work with swing state voters where we see Trump is ahead?
Well, let's talk about Biden. There's still some governing to do. So he can step back from campaigning. He's got to lean in to foreign policy. The Israeli Prime Minister is here this week, and there are conflicting reports, let's say, about when they're set to meet, because we still haven't seen the sitting president since, what, Las Vegas, Nevada, last week.
July 17th, the last time we saw him leaving Air Force One when he was going to depart to Delaware for isolation. And he's been in isolation since. So we will see him today. His schedule says he's set to come back to the White House. Netanyahu's team said the meeting was supposed to be today. Because of this COVID, it's been postponed. We're hearing that it's going to be on Thursday, which means likely tomorrow, because before he sits down with Netanyahu, he needs to address the American people. Because the American people found out the sitting president is not seeking re-election through a letter, not through an address to the American people. And there's a lot of questions about that. Why was that done? So before he sits down with Netanyahu, he's going to have to get in front of a camera.
I will just say that Netanyahu is also meeting with Kamala Harris in a separate meeting. And this comes at a time when there's a real question, to your point, John, about who exactly is going to be pulling the strings from here until November.
There's some real governing to do over the next 6 months, that's for sure. Let's turn to the price action. Equity futures on the S&P 500 positive by 0.1%. Let's get into the bond market. Treasuries rallying. Yields are lower by 2 basis points, 422.91. And the dollar snapping back. A bit of dollar strength against the euro. 108.62 on euro dollar. We're negative there by about 0.25%. Coming up this hour, we'll catch up with Ed Yardeni of Yardeni Research following the S&P 500's best day since early June. We'll speak to Congressman Jake Auchincloss as Harris strengthens her hold on the Democratic ticket, and Jill Carey-Hall of Bank of America on the bullish case for small caps a little bit later this hour. We begin with our top story, the S&P 500 snapping a 3-day losing streak as investors reassess election risks. Ed Yardeni of Yardeni Research writing this: a second presidential term for former President Donald Trump still looks likely. For now, the financial markets are uncertain as to how to prepare for Trump 2.0. Ed joins us now for more. And Ed, to make it even more confusing, you say there is more than one consensus. So you're going to have to explain that to me. How can there be more than one consensus?
Well, I think there's several financial markets, and among the financial markets, there's different views. For example, in the commodity markets, there's quite a bit of weakness in copper prices recently. There's quite a bit of weakness in the oil price. The oil price has been remarkably subdued in the face of all the geopolitical risk that's out there. On the other hand, the stock market suggests that things are just fine. Now, I think some of the differential is that the commodity market is probably looking at things more globally, whereas the stock market, especially if we're looking at the NASDAQ, the S&P 500, is looking at things more locally. So I think that's part of the divergence. Even in the fixed income markets, we have some divergence. The Fed funds futures market is looking for something like 5 rate cuts over the next 12 months. And yet the bond yields held up remarkably well, around 4.2, 4.25%. I don't think they've been discounting the possibility of 5 rate cuts the way the Fed funds future has been discounting. So a lot of opinions in the financial markets all over the place.
So, Ed, given the fact that we have 3 different asset classes that you've just identified with 3 very different characteristics, do you think those 3 worlds can coexist?
Well, I guess the answer is something's got to give. I mean, there's only going to be one scenario that unfolds, and I think the scenario that's going to unfold is really more of the same. I think that the global economy is kind of muddling along. It's hard to get very excited about anything happening in Europe. The Chinese economy looks downright weak. I think they still have a property depression that they just can't seem to really offset with easier monetary policy. Just yesterday, they lowered their interest rate, and the price of copper went down. So that was not a real vote of confidence in the government's ability to deal with the Chinese weakness. On the other hand, there's no recession in the U.S. The U.S. looks absolutely fine. The latest Atlanta Fed reading on GDP is 2.7%, which is very good. And inflation's moderating. So it's an ideal scenario for the stock market.
The Roaring 20s come back. Ed Yardeni, you were one of the first to talk about the Roaring 20s. A lot of people have gotten on that boat and actually met you at some of your forecasts, which you even brought forward as we've seen markets increase at an accelerating rate. At this point, there is so much disagreement about whether there can be a broadening out in this kind of rally, or whether ultimately the blip that we saw over the past couple of weeks in big tech, in some of the growth stocks, is a buying opportunity to double down, because those are going to be the winners no matter what.
I think they are going to be the winners no matter what, but I don't think that they can be sustainably the winners unless the market does broaden out. It's my pet theory that in the Roaring 2020s, every company is a technology company. They either make technology or they use technology to increase their productivity. There is still a significant shortage of skilled labor out there. There's a lot of technologies that can boost productivity, cut costs. And if you don't use those technologies and your competitors do, you'll be simply out of business. So I think I think we started to see the beginning of a productivity growth boom last year. I think it continues through the end of the decade. I think margins go up. I think profits go up. I think the stock market goes in that kind of scenario.
Given that as your base case, Ed, how do you interpret a very different view company from company when we get earnings of what's going on in the bottom line? You've got UPS talking about falling package volume in the United States, falling revenues. You hear from the airlines, their hands are tied in terms of how much they can increase prices. We've heard that from some snack food company, Coca-Cola, not among them. How do you understand some of the differing messages depending on which company you look at?
Well, I think you certainly, I certainly look at the individual companies and try to start from the bottom up and see how that all adds up. But at the same time, as an investment strategist, macroeconomist, I also do the exercise from the top down and kind of see where they meet in the middle. What I see is overall earnings are growing in line with an economy that's doing fine. Analysts are expecting earnings to be up 8% on a year-over-year basis during the second quarter. I think they're going to come in at 10 to 12% on a year-over-year basis. Same thing happened in the first half of the year. Analysts were too conservative on earnings growth, and that's one of the reasons that we had such a strong stock market in the first half of the year. I see signs that the goods economy is bottoming. We've had a rolling recession in the goods economy, as we've seen, for example, the purchasing managers' indexes. But I think we're going to find that things are starting to improve in that area as consumers start buying goods again.
Interesting.
Still buying services, though.
Ed Yardeni, of Yardeni Research, again, apparently just not paying up for flights, which I'm still struggling to get my hands around. Ed Yardeni there, of Yardeni Research on the latest. I'm still struggling with that one. The airline's saying, you know, capacity's gone up too much, flight costs have come down, and then we see the scenes in Atlanta, which I know to do with all the cancelled flights, but these planes have been packed all summer, and I didn't see a real identifiable drop in ticket prices, that's for sure.
not when you look at certain popular routes. But then when you look at certain domestic routes, that's what people are saying. And you actually do see this when you look at pretty esoteric cities. I'm not going to go into which ones. You can see the prices go down more significantly, or at least not be as, through the nose expensive.
You can share that in the commercial break. Equity futures on the S&P, just about positive by almost 1/10%. Let's get you an up-to-date on stories elsewhere with your Bloomberg brief. It's Danny Berger. Hey, Danny.
Hey, John, some more earnings to go through for you. GM shares are higher by 4.6% in the pre-market. They topped forecasts. Profits surged 60% from a year ago, thanks to demand for its gas-powered pickup trucks and SUVs in the U.S. On the other hand, there was a slowdown in sales growth for EVs, which are losing money at the current volumes. It does highlight a pivot back away from EVs and tech-fueled growth into a gasoline-fueled cash generator. Shares of Coke, they are slightly higher in the pre-market, 1.1%. The soft drink company raised its full-year guidance. It also reported comparable earnings per share for the second quarter that beat estimates. The company says it was encouraged by its results in a, quote, ever-changing landscape. Coca-Cola's results come in contrast to its rival Pepsi, which reported weaker than expected revenue and tempered its annual outlook earlier this month. Now, General Electric reporting a jump in second quarter profit, those shares up 2%. It also raised its guidance for both cash flow for the year and profit. The jet engine manufacturer capitalized on strong demand for the busy summer travel season, so figure that one out. It also became an independent company in early April, now GE Aerospace. It was able to navigate consistent turmoil in the aerospace supply chain, responding to strong demand for maintenance and spare parts as aircrafts age. And don't miss our interview in the next hour. Larry Culp, GE Chairman and CEO. And that's your brief, John.
Danny, thank you. Must-watch conversation with Guy Johnson a little bit later on in the program. Up next, Democrats charting a path forward.
Vice President Kamala Harris has excited the community. She's excited the House Democratic Caucus, and she's exciting the country.
And the money over the last couple of days has followed. From New York, that's next. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Live from New York City, welcome to the program. Let's start with equity futures on the S&P 500. We're shaping up as follows on the S&P. We're a little bit firmer off the back of the best day of gains on the S&P 500 since early June. Yields on a US 10-year look a little something like this going into supply later on. Your 10-year at the moment in the Treasury market yields lower by 2 basis points of 4.25%. 2023. That's the equity market story. Let's get to the earnings a little bit later. We'll hear from the likes of Alphabet and Tesla after the closing bell. Those two, the starting gun for the earnings from big tech over the next week or so. The next week looks a little something like this. Let's go through the next week and look at the likes of Alphabet. Later, onto Amazon and Microsoft next week, Meta, Nvidia. Just a fantastic lineup of earnings, Lisa, coming up over the next week or so.
The question is, can this shift the conversation past the three pillars, the two pillars that we've been talking about obsessively, being the politics, which has dominated a lot of the conversation, and the economic data, which does show a gradual weakening, but not necessarily an economy falling off the cliff. What we have seen so far is pretty good. We have later in the show today an analyst coming on who says that a beat is basically just a meet. That if you see a lot of companies meeting expectations, that will increasingly be viewed as a beat at a time of reduced expectations.
So let's talk about some of the earnings we've had already. Can we get the pre-market movers up? Let's check out the pre-market movers that we've seen so far. So we've heard from the likes of UPS, heard from them a little bit earlier this morning. We heard from GM, General Motors in the last hour as well. We also heard from Coca-Cola. And let's compare and contrast the likes of Coca-Cola to, say, a Pepsi. Coke was pretty decent, Lisa. We've been talking about Pepsi over the last couple of weeks, about a consumer struggling, backing away from snacks. Then Coke reports this morning, and you don't see a big problem at all. The name is up by about 1%.
Net income going to 56 cents a share from 59 cents, falling just slightly, but still adjusted earnings per share beating the forecast pretty much across the board and having a more positive kind of view of the world. What we're seeing, and I don't want to say idiosyncratic, but let's say idiosyncratic, are specific stories that are either coming to roost in a good way or a bad way. UPS, bad way, costs, some of their new union contracts really eating into their profit revenues. GM, their pivot back to gas-fueled trucks, really helping to support record revenues for the first half of this year.
The tone for this earnings season, it didn't start well. It started with Delta. And Delta reported about something I don't think we'd thought about this summer, because we'd all seen the airports in this country absolutely packed. They talked about additional capacity, okay, at a time where we couldn't secure enough Boeing airplanes, and they talked about lower ticket prices. I want to cross over to Bloomberg's Guy Johnson, who's at the Farnborough Air Show. Guy, I want to understand about the capacity issues that some of these airlines are struggling with at the moment, and whether that could get worse if Boeing actually gets the job done and starts delivering planes in a much faster way.
Well, you got to remember as well, John, that the airlines are flying a lot of older aircraft. So if they can start getting the newer aircraft in, they'll just kind of replace much of that one for one. So they'll retire some of the older aircraft that we're seeing. If you want evidence of the older aircraft that are currently flying at the moment, A, take a look at Delta, which flies one of the oldest fleets out there, which is interesting in itself. But B, take a look at the GE numbers this morning. They crossed the table a little while ago. There's a beat and a race from GE. I'm going to be talking to Larry Culp very soon. One of the reasons why Larry Culp is seeing the strong numbers that he is at the moment is because the maintenance business is so strong. That is a super high margin business, spare parts and maintenance. And the carriers are flying very old aircraft right now, and that is boosting his bottom line because they need to come in the shop, they need to have extra parts, and that is really helping him out right now. So yes, in some ways, we are seeing older aircraft continuing to fly. That's good news for GE. If Boeing gets its act together and is able to start delivering some of the narrow bodies in particular, then I think you'll see a lot of these airlines bringing those aircraft in relatively quickly, but it's unlikely to happen this summer. It's too late for this summer. You want to bring aircraft in at the beginning of the summer. You don't want to bring them in midsummer, so this will be a story for next year.
Guy, I do want to get your view on why we're hearing such different messages or conflicting messages from the airlines. But before we go there, you're talking about Larry Culp, GE benefiting from the fact that older planes are being flown. And then this question of whether Boeing can get its act together. Will Boeing tap Larry Culp to get themselves together?
No, that's not going to happen. Larry's just continued his contract. He's going to be at GE until 2027. So that ship maybe has sailed from a Boeing chairman point of view. He's not on the list, it seems, for that Boeing job right now. I'll ask him about it, ask him why he's decided to continue at GE. But he's managed to turn this business around. Remember, Lisa, this is a company that spun out a lot of its component parts. The GE business, the core business, the jet end business, business, remember this is the largest jet engine business in the world, is now a standalone business. This is almost kind of a new business that we're seeing on its own right now. And it looks like he's probably going to continue at GE for some time. As I say, the contract has just been renewed. Looks like Boeing and the recruitment team at Boeing are going to have to look elsewhere for a candidate. So GE continues. And today was a beat and a raise. So he's obviously managing to deliver what he's promised and set out for shareholders. Looks like the stock's up a little bit pre-market. We're waiting for the call.
There are a lot of people who are listening to you and saying, nah, he's still going to be the guy, because that's what everyone has been saying. We say, who would actually be the person to run it? And they say, Larry Culp and only Larry Culp. Moving on to what we're seeing right now in the airline industry, can you give us a sense from the tone on the ground at the show you're at about why we're hearing from airlines that they don't have the same kind of pricing power and that they're concerned about filling their flights, at the same time that our just empirical evidence seems to suggest that flights are completely packed and it seems like people are traveling as much as ever?
So there's two things going on, one of which is the long-haul business, I think, is still relatively strong. I've spoken to a number of the long-haul carriers over the last couple of days. The message from them is certainly that they are continuing to see strength. If there is weakness, it is at the narrow body end, the short haul end of the market. That's where probably there is greater capacity. That's where you've obviously got business models that require high yields, i.e. full aeroplanes. And that is where the legacy carriers, let's call Delta a legacy carrier, is having to compete with the likes of Alaska and the lower cost carriers as well. So that's where the real competition is right now. So if there is a crunch point, that's where it is. And you've got to remember as well, so you look at an airline like Delta, as I mentioned, it's flying an older fleet. That means in some ways that Ed Bastian has a lot of amortized aircraft. He's already paid for those aircraft. In some way, he has the capacity in those markets, therefore, to lower prices and maybe be a little bit more dynamic in terms of his pricing, because the aircraft are paid for and he doesn't necessarily have to keep fares as high as he would have done. But that's where the real crunch point is. That's where the competition is. And it was interesting to see Ryanair as well, maybe suggesting that similar things maybe are happening in Europe, though it does seem actually as if what Ryanair was saying, you look at the back end of the statement, the demand is still very strong. It's just kind of a pricing factor. So there is a little bit of a capacity story in Europe as well. And then we'll see how that story develops.
Guy, I also noticed that this air show is not immune to U.S. politics. Glenn Youngkin was there. You sat down with him yesterday. Donald Trump calls him prime time. Is there a sense that CEOs are trying to get ahead of the U.S. election and get in front of each camp? And who are they betting on?
Well, uncertainty was a word I heard a lot, certainly yesterday and continuing again this morning. I spoke to Guillaume Faury. He's the CEO of Airbus, and he's kind of hoping that the Alabama plant that he's got will be able to insulate him from potentially a tariff story. So everybody's talking about tariffs and the potential for tariffs. Remember, this is an industry that has been upended by supply chain issues. You throw tariffs into the mix as well, that could only compound that issue and make it more difficult to manage. But a lot of these big manufacturers, the OEMs, the tier one suppliers like GE, Rolls-Royce, they are reasonably geographically diversified, so maybe that doesn't become a problem. But the uncertainty is absolutely huge as well. The other factor, Lisa, is what's happening on the defense side. Take a look at what is happening with GE this morning. A little bit of weakness maybe there. If Trump comes in, we get a 2.0, does defense spending start to creep higher?
Hey, Guy, looking forward to this conversation later. Bloomberg's Guy Johnson sitting down with Larry Culp of GE. The first question, do you want the job at Boeing? You know, it's not going away, is it?
No,
it doesn't matter what Guy says.
Guy's like, he doesn't want the job. You think anyone's going to say, okay, I guess he's not in.
So do you want the job? From New York, that conversation later. This is Bloomberg.
Give me the right answer.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Live from New York, welcome to the program. Here's the equity market. Futures just about positive by, let's call it, 1/10% on the S&P. That's stocks. Switch on the board and get to the bond market. We'll check out treasuries. Yields look a little something like this, down 2 basis points on a 10-year. Your 10-year 422.91. And in foreign exchange, a little bit of yen strength going into the BOJ meeting in the next month. Big conversation about whether we'll get rate hikes or not. Dollar yen down to 156.10. We're down about 0.6%. That's the price action. Here are your top stories. Under surveillance this morning, CrowdStrike CEO George Kurtz is being called to testify before Congress following the defective software update that caused the global IT outage. A House committee asking the company to promptly schedule a date. Your next story, tech earnings kicking off after the closing bout today, starting with Alphabet and Tesla. Analysts are likely to focus on the Google parent company AI revenue, and also pressing Tesla for answers about the delayed robo-taxi rollout. Look out for that this afternoon. And Harris's campaign finally receiving more than $100 million in donations since Sunday, as an unofficial AP tally shows her securing enough delegates for the Democratic nomination. Speaking at her campaign headquarters, Harris saying, "I am proud to have secured the broad support needed to become our party's nominee. I look forward to formally accepting the nomination soon." To have that discussion now, I'm pleased to say that joining us, Democratic Congressman Jake Auchincloss of Massachusetts. Congressman, great to catch up with you, sir. You've been a big supporter of the president. You weren't one of those that came out and asked him to stand down. You were one of those who highlighted the success he's had, his track record over the last 3.5 years, which makes me wonder how confused you might be that given how good you think that track record has been, why people within your own party has forced him to step aside.
Good morning. Thanks for having me on. General elections are won or lost when the terms of the debate are set. And the terms of the debate previously were the president's age and acuity. Now, with Kamala Harris having taken the torch, the terms of the debate are the future versus the past, our rule of law versus the law of the ruler, our Donald Trump's obsession with the grievances of the past versus the possibilities of a strong American economy. These terms of debate, Democrats will win.
Congressman, do you think it was appropriate, though, that the president told the American people through a letter, and we've yet to hear him address the American people? He's a sitting president. We haven't seen him since July 17th, and he has yet to give remarks to the nation about why he is stepping aside.
The president laid out his decision in a thoughtful and well-crafted letter, and then he's going to address the nation this week, I believe. And I think he is going to do what he has always done, which is put the country's interest ahead of his own, which is a stark contrast to what we have seen from Donald Trump, who rather than cede power, clung on to power, incited an insurrection, and caused the deaths of officers in the line of duty. That contrast will not be lost on the American public.
But at the moment, there's a lot of questions surrounding why we have yet to see him and decided to do this through a letter. Is it your understanding that if he didn't drop out this weekend, more of your colleagues in Congress were going to come public with their concerns about his age and mental acuity?
I don't think conjecture about the past is particularly fruitful right now. We have our nominee. It's Kamala Harris. I think the focus now is how do we sprint through the next 100 days to win this election? Because the contrast now is going to be on Democrats as the party of the rule of law. As Americans intuitively understand, without predictability, without law and order, we cannot thrive as an economy and as a civil society. The Republicans have nominated a convicted felon. The Republicans are trying to surge guns onto our streets and in our schools. The Republicans are voting against bipartisan border security legislation. The Democrats are the ones that the American public can trust to uphold the rule of law, and that will be the conversation.
Does this to you look like basically a coronation, though, of the vice president? The Wall Street Journal editorial board this morning talked about that the country's now losing the chance to see a genuine and instructive party debate unfold. She is winning by acclamation among all of the Democratic Party insiders and money men who've swung behind her. How concerned are you that this looks like a coronation of vice president and not like a democratic process?
I like competition. I like competition in business. I like competition in politics. And I think the Democratic Party should not be afraid of it. And we should have an open and transparent process to choose our next nominee. But Kamala Harris can't help it if everybody endorses her and she gets the majority of the delegates within the first 24 hours and she sees a surge of base support. I mean, she's going to compete hard. She said she was going to earn it and win it. She's earned it. She's going to win the nomination. And now we have to make sure that she wins the general.
Congressman, I think the way to put this together is there's this question of how can the Democrats be the party of democracy if they bet on a president to run again and just months before the election date, he was pushed aside and somebody else was brought in. It raises questions about the Democrats' view on the democratic process of election. How do you counter some of those real concerns that people have?
I think that's a flawed premise. I was here in the chamber on January 6th. I've seen what a coup looks like. What happened here was the Democratic Party is designed to win elections in order to effectuate policy that helps American voters. Joe Biden, through 14 million voters, won the delegates. He then decided, I'm going to step aside. Those delegates were unbound. They were free to choose whomever they wanted to carry the torch, and they chose Kamala Harris. That is exactly the way that delegates are supposed to happen under Democratic Party rules. Now, voters are going to see a choice between Kamala Harris and Donald Trump. They will have the final determination of whether they like that choice. And I am confident that since 70% of Americans previously said they wanted a change at the top of both tickets, and only Democrats have responded by actually doing it, that they're going to choose Kamala Harris.
Congressman, there's also a lot of concern about what people don't know. And I think that that's what the debate really highlighted for a lot of people. What aren't we seeing about the state of the current president who still has to rule until early next year, regardless of who wins the White House? At what point can you truly allay those concerns at a time when we haven't seen him and there is this fear that, you know, it's something more that caused him to withdraw than simply pressure that has been mounting for a while and that he was pretty defiant in the face of?
Well, I mean, I know a few days is an eternity in the media, but we actually have seen him a lot over the last month. We saw him on the debate stage. We've seen him do one-on-one interviews. We've seen him at rallies. And most importantly, we've seen his track record over the last three and a half years. This president took an economy that was flat on its back, and we now have strong jobs and inflation numbers. This president has restored U.S. global leadership. This president is protecting civil rights and democracy at home. Americans can see the track record, and Americans like the policies. And that's what Kamala Harris is going to be able to run on now, is we've put the age and acuity issue to bed. We have the policies front and center. We have a dynamic candidate, and we're going to win.
Congressman, you just said that they like the policies. Can you point to the polls where that really shows up?
Medicare negotiation of drug prices, investing in infrastructure, the CHIPS and Science Act to turbocharge our competition against China, Electoral Count Act reform to help close the January 6th loophole, Bipartisan Safer Communities Act that has helped push homicides.
Yeah, that's a long list of issues. You're right to point them out. That's been a successful part of the administration, but he was behind in the polls to such an extent, the leadership within your party pushed him off the ticket, Congressman. I just feel like this conversation at the moment feels like we're in two different realities. You just then made it about the news cycle. Let me just finish up. I felt like that was needlessly snarky, sir. This is not about the news cycle. This is about the sitting president of the United States that chose to make one of the most consequential decisions of his career on Twitter on Sunday, and we've not really heard from him since. And I find it odd that you don't think that's strange.
It's Tuesday. He issues a letter on Sunday. He's going to address the nation. He laid out his reasoning. This country over the last 250 years has seen some of its most consequential moments described in print. There is nothing that's an affront to the American public about laying out in black and white text his reasoning. He will address the public, and most importantly, he has demonstrated to the public over the last 3.5 years that not only can he be president, but he can be a top 10 president in American history.
So why isn't he running?
He isn't running because the concerns about his age and acuity are undermining his ability to beat Donald Trump and undermining the constituents' confidence that he can discharge the duties of his office 4 years from now.
But they're the concerns that your colleagues have, correct? That's come from within your own party. That's not like something that's come from the media. It's officials, peers in your own
and I've been very clear about that. The concerns are organic.
If they don't believe the policy is more important than his age, I've just really struggled here. You've come out a few times, and I've seen some of your comments previously, and we keep going back to this track record, the policies, the last 3.5 years. Don't you think if the public thought those policies were that good, we wouldn't be in this position to begin with?
No, because the public was focused on the president's age and acuity. We now have a different candidate at the top of the ticket, and elections are about the future. And what we are going to say to the American public is, look at what we have accomplished over the last 4 years. Let's take this forward as we debate tax policy in the next Congress. Let's take this forward as we debate immigration policy in the next Congress. Let's take this forward as we debate reproductive freedom in the next Congress. And let's demonstrate that we can make this economy work for everybody. Let's demonstrate that we can continue to heal our democracy after the depredations of the Trump administration. And all Trump is going to be able to say is that same spew of grievances and self-pitying and egocentric lamentations that we heard from his convention speech, where he tried to go for 20 minutes and sound statesmanlike, and he couldn't get past 10.
Congressman, if it's your own colleagues, the elder states, individuals, if you will, of your your leaders, Pelosi, Schumer, all of these leaks, if they're the ones that are concerned about his age and mental acuity, then should the president step aside? How can the American people be confident that he can fulfill his duties for the rest of his term?
He absolutely should not step aside. This president is fully able to be commander-in-chief. We've seen him walk a tightrope in the Middle East, protecting the security of Israel while not allowing for a regional conflagration. We've seen him rally NATO to Ukraine's side. We've seen him bind together South Korea and Japan and the Philippines and Australia to help counter Chinese belligerence in the Indo-Pacific. This president is a highly successful foreign policy president who has also implemented monumental domestic policy legislation. He has demonstrated he can do the job. He's 81 years old. Voters had concerns about his ability to do the job for 4 more years. Democrats listened. Democrats put forward a younger, dynamic candidate. And now the Republican Party is going to have to explain why they're not doing the same thing. Because 70% of Americans wanted a difference at the top of both tickets, and Republicans responded with a mosh pit in Milwaukee.
Congressman, appreciate the stern defense. Thank you, sir. Congressman Jake Auchincloss there on the latest out of Massachusetts, a stern defense of the President of the United States. And some of the comments I think you heard there, you're going to hear that a lot on the campaign trail over the next 3.5 months.
Absolutely. Republicans are already saying if Biden cannot seek re-election, then he should be stepping aside. And there's a lot of concern, actually, that we haven't seen him for almost a week. It was July 17th. That was last Wednesday when he stepped off Air Force One, went into isolation in Delaware. There was this phone-in to the Harris Now campaign headquarters in Wilmington yesterday. But we have not seen him on camera. And the reason why this is concerning is because he ran an entire election on camera. This was during the depths of the pandemic when people were zooming in. So we have seen him take to his house to hit the airwaves. Why did he decide to do this via a letter?
We will be hearing from him, presumably, or seeing him today. There is also this question of, is this going to be really an election about age? And if it's going to really be the case, can the Democrats pivot this around to Donald Trump and say now he is the oldest candidate ever to run for president, and he needs to take a mental acuity test, et cetera, et cetera. You see how this goes. It goes to beautiful, wonderful, dirty noise.
Well, I think it was Nikki Haley earlier this year who said whichever party dumps their 80-year-old candidate is the party that's going to win. That was from Nikki Haley, who wanted to be the top of her Republican ticket. She didn't get the nod. But now everyone is just replaying that sound because the Democrats are the one to dump first their 80-year-old.
Things can change again. They've changed a lot over the last month, that's for sure. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Morning, Danny.
Good morning, John. Israeli Prime Minister Benjamin Netanyahu says prospects for a hostage deal with Hamas are improving. Netanyahu spoke while in Washington. It's his first foreign trip since the conflict began almost 9 months ago. Netanyahu is scheduled to meet with President Biden on Thursday, 3 days later than originally planned because Biden has been isolating with COVID-19. The first ETFs investing in Ether will make their trading debut today. Regulators have approved spot Ether ETFs, according to filings and statements from asset managers that paved the way for the imminent trading. It's yet another landmark for this ETF industry after spot Bitcoin funds debuted in January. Several issuers like BlackRock and Fidelity are partially or completely waiving fees to try to attract assets. However, analysts do expect that Ether won't draw as much demand as its Bitcoin counterpart. UPS shares, they are sliding in the pre-market trade 7.7%. It reported profit that missed estimates amid heavy costs and uneven demand. Their hyper labor costs, soft demand for packages, and that led them to fall short of those second quarter estimates. Now, it's also grappling with high costs from its Teamster union contract. UPS does say that those costs will be front-loaded. The shipping giant also trimmed its full-year outlook, and it's going to restart its buyback program, targeting $1 billion annually. And that's your brief, John.
Hey, Danny, thank you. We'll catch up with Danny again in about 30 minutes' time. Up next on the program, the great rotation debate.
There has been a technical rebound, likely driven by sentiment positioning for small cap, but we're not chasing that momentum because that rebound is not supported by fundamentals.
We'll get you the bullish view on small caps up next on the program. Live from New York, this is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
You want to continue that conversation?
Please let's not. Let's leave that there.
Equities. Let's get to stocks. It's always a safer place. On the S&P 500, positive by 0.05%. Yields are lower by a basis point or two. On a 10-year, 423.49. Under surveillance this morning, the great rotation debate.
When it comes to earnings, small cap, for over 1 year now, they didn't deliver any earnings growth. For this ongoing earnings season, they're expected to recover a little bit, but still really lagging the broader picture. There has been a technical rebound, likely driven by sentiment positioning for small cap, but we're not chasing that momentum because that rebound is not supported by fundamentals.
So here's the latest. Small cap stocks looking to bounce back after coming off their biggest 2-week rally in years, with earnings season ramping up. Jill Carey-Hall of Bank of America writing this: we still think pockets of small caps are poised for continued outperformance. Be selective near term. Focus on value stocks where we'd still stick with quality or profitable value. Jill joins us now for more. Jill, good morning. This is your turf. This is your world. So let's get straight into it. Small caps. When I buy the Russell, what am I buying and why should I be buying it at the moment?
Well, I think, we had gotten more cautious on the Russell 2000 as an index back in April when the inflation data had continued to come in stronger. And, really we highlighted there was two things that we need to see to get more bullish on the Russell as an index. And one is, more confidence that the Fed will be able to begin that cutting cycle, which now is what we've started to see and what was a big driver of the rally we've seen over the past week or two. I think the other is fundamentals and profitability. And that's where, the Russell does have a high proportion of unprofitable stocks. It saw a much bigger earnings recession than the S&P 500. And that's where I think investors are a little bit worried, because when you look at the beginning of the year, investors were expecting that by this earnings season, small cap profits would have come back, recovered, been better than large cap profits growth. And that's not what we've seen. We've seen a lot of hope held out for fourth quarter of this year, a very strong recovery, but the first, second, and third quarters of this year, estimates have gotten revised down significantly. So I think that's what, we really need to see if we want to see if this rally is sustainable is, can we get good earnings data this earnings season, not only surprises to the upside, but guidance that supports that the fundamental backdrop is healthy for small.
So let's pick a sector, a dominant sector on the Russell, the financials. We can talk about the financials. The regionals have been a big part of the story now for the best part of 12 months. We've had a big rally there. Do you think there's reason to believe earnings will pick up and re-accelerate as we start to cut interest rates at the Federal Reserve, that things get better for that cohort of companies?
Right. Yeah, financials has definitely been a big leader of the rally recently. And certainly, if we see an outlook where we're looking for Fed cuts, where we're looking for soft landing, no significant deterioration in the economy, that should be supportive for financials. I think, when you look at factors like the regionals and credit conditions, that's still a risk that's out there. So, if we're in a backdrop where the Fed's cutting because economic conditions have deteriorated significantly, credit spreads are rising, that would be more negative versus a backdrop where the econ is still supportive. But certainly for financials, I think we've been due for a catch up, especially within small caps. Looking out, I think we still would be more cautious on some of the regionals, and it's an area where you want to be selective in relative to the large caps, which, large caps already got regulated. They saw their multiples contract for a number of years after the financial crisis. Regionals still could be subject to that. If we see greater focus on some of these regional banks that haven't had the regulation that the larger SIFIs have.
There's sort of a tortured relationship a lot of investors have with these names, just simply because they have gotten so beaten up that on a valuation perspective, they look great. And then you look under the hood and you start to see a lot of concerns. One of these numbers, I'm talking more generally, not just the financials. More generally, you put this out, that only 13% of second quarter reporters of small cap companies have beaten on earnings per share in sales. That compares to 51% of large caps. Can you give us a sense of why? Why smaller companies are struggling to really meet some of the expectations, even as large caps continue to outperform?
Yeah, it's been still pretty broad-based, where just that overall profits recovery has been much slower to come to fruition in small caps. And the earnings decline was pretty much across the board. And when you look at second quarter expectations, pretty much most sectors are expected to still see negative earnings growth this quarter. So, smaller companies have been more challenged. And when you look at the large caps, obviously a lot of the Magnificent Seven, some of the big tech stocks have been the drivers of earnings growth. We do expect that to slow and see a broadening out to the rest of the other 493 of the S&P 500. So it's a similar story for small caps, but a lot of these smaller companies have still been challenged. You've had less profitable companies within the index. You've had sectors like healthcare, where that's been one of the sectors that saw the biggest decline and now is expected to see among the biggest recoveries. So I think when you're thinking about buying the fundamentals of these companies, that's why we've been still more cautious on the overall index. But I think in pockets of small caps, there's still a lot of opportunity. And as you pointed out, the valuation backdrop, the positioning backdrop is very supportive. Investors have been very underallocated to small caps. We've seen investors want to get more bullish on small caps. They've been such a laggard for such a long time. So I think the areas that are perhaps less sensitive to refinancing risk, if there's still some uncertainty on the Fed, could be a good area. Areas that are sensitive to still cheap but have positive estimate revisions if we're in a backdrop where that's still uncertain.
You went to the area that I wanted to go to. There's three pillars of economy, earnings, and politics. We're focusing on the first two. We've talked about earnings, but what is the read-through to the economy? This question of small caps ostensibly have more floating rate debt, are more sensitive to perhaps higher rates by the Federal Reserve. Is that a key reason why you're not seeing earnings increase at a faster pace akin to some of the larger companies that were able to lock in some of those funding costs that were really cheap earlier on?
Right. Yeah, I mean, small caps definitely have a lot more, as you pointed out, floating rate, short-term debt. Almost about half of their debt falls into that profile, whereas large caps, about 80% of their debt is that long-term fixed rate debt. So, I think the fact that we've seen inflation start to come down and the Fed could be on track to begin cutting rates. Our expectation is in December of this year, but obviously the risks have been pulled forward that maybe a cut in September is possible. So, that eases some of the risk. The fact that we've seen credit spreads have been low. Some companies have been willing to refinance even though rates are high because credit backdrop's been supportive. So that's the risk, is if we see credit spreads start to rise again, that could become a headwind to the profitability as well. So I think this is a backdrop where you want to be selective within small caps and not just by the Russell, which we think further clarity on the profitability backdrop could help. But for now, our analysts at BofA cover about 1,000 small and mid-cap stocks. I think there's a lot of opportunities for alpha if you can focus on, like I said, the names that actually just have positive estimate revisions in a backdrop where revisions have still been coming down. Guidance has been weaker in small caps, some of the value stocks. But, we're watching what companies are saying this earnings season. If guidance can get a bit better, it's still been a bit weak, within small caps, then, companies beating and raising, I think, could be supportive of a broader, index rally and, similar to the risk rally we saw over the past week or two.
Jill, I have to ask about the third camp that Lisa alluded to, the politics. How much is small caps a bet on Trump-Vance?
Well, I think when you look at, the rally over the past week, really some of the initial drivers were more on positioning and, risk on. We saw financials as a big rally, deep value stocks. We saw stocks with high short interest rally as we saw some initial short covering. And when we've looked back, really, while certain political factors or political policies can certainly impact small caps when you're looking at tax rates or when you're looking at policies that could impact growth, overall, we found that profits tend to matter more than politics for small caps and for equities. So, I think what's going on with GDP and interest rates is going to be a bigger driver of the index than necessarily which political party's in office.
That's the piece of the story we're all waiting for. Jill, it's great to catch up. Jill Carey-Hall there of Bank of America, sort of echoing what we heard from Brian Levitt. Brian was much more brutal about it. Much ado about nothing. That's what he said the politics was for this market.
Basically all noise, and anyone who really talks about a Trump trade, he finds a lot of logical fallacy, as he put it earlier this morning.
That's a kind way of putting it. Coming up on this program, in the third hour of Bloomberg Surveillance, we'll catch up with Don Stolfus of Oppenheimer, Stefan Slowinski of BNP Paribas Exane, Mark Giannoli of Barclays, and Sofia Drossos of Point72. All of that still to come from New York. This is Bloomberg.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you also have to, you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really it's not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, a year in terms of what we have to replace.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
AI theme is still expected to do most of the heavy lifting for earnings growth.
We think the market has been a momentum, growth, and size market this year.
We're hoping that some of that performance can spread into the smaller cap area.
We all know breadth has been far too narrow, right? And that leadership needs to expand.
I really want to see which way the earnings go. The big tech names, continue their dominance. Maybe things get a little bit better. I can see investors going back there pretty easily.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance begins right now with a big focus on the earnings. A little bit later, we hear from Google and we hear from Tesla. Already this morning, hearing from a few names. I want to pick out these two names. I want to talk about GM, which is up nicely in the pre-market by close to 5%, and Coca-Cola up by 1.7%. Now, I know it's difficult to get a clean read on earnings at the best of times, and it's always easy to cherry-pick a company or two and try and talk about a beautiful, clean story. But I'll tell this story. We started earnings season with Delta and Pepsi, and those two names didn't really spell out a good picture for the US consumer. This is better. Americans are buying trucks, things are better over at GM. Coca-Cola's telling you a story that Pepsi couldn't a few weeks back.
Basically beating and raising full-year outlook as they see their products still very much in demand. It raises a question about whether the weakness that we see in some companies is due to just execution risks or issues with their actual business model or just failed bets versus an actual truly weakening economy. What you can see in GM is sort of a fascinating microcosm of the shift that's going on in the car industry. Basically going back to gas trucks, selling them to Americans, and pulling back some of their investments in electric vehicle factories, really highlighting how much the tide has shifted in that industry.
This is going to become a bigger campaign issue. Not the campaign issue, obviously, but a bigger campaign issue with Elon Musk and Tesla at the epicenter of this conversation.
Absolutely, because you have Tesla, which arguably would benefit from some of Biden's policies and what the Trump campaign calls, which isn't, but calls an EV mandate. At the same time, Elon Musk is all in, as we've seen, on the money and the endorsement to Donald Trump. I find it fascinating for GM, and John, you know this very well because you spoke to Mary Barra about this. The transformation at GM, this arc of we're going so hard on EVs, well, actually, we think people might actually want hybrids, and now it's like, all right, we got got to get our bottom line up, we're going to sell gas guzzlers.
Well, it goes to the point that we've talked about extensively on the show, which is essentially there is this long-term outlook that's the same for a lot of these auto manufacturers. They still are talking about a net zero type of pledge and moving to more electric or more environmentally friendly cars. It's the pace. Is exactly what's going to cause the bottom line to go up. And it's the incentives in terms of, is it a government incentive or is it just what the demand is in the market? And right now the demand is U.S. trucks. And if you go on any highway, that's what you can see.
It's perfectly framed. The destination hasn't changed. This is just about the pace, the time it's going to take to get there. Let's talk about a broader price section for you. If you are just joining us, welcome. This is what it looks like. Really decent day of gains yesterday across the board. On the Nasdaq 100, we absolutely ripped after the 4% loss through last week. We're up this morning by just short of 0.1% on the S&P. In the bond market, yields are lower by 2 basis points, the 10-year 423.10. And in foreign exchange, the dollar just a little bit stronger here against the euro. No drama, 108.59. We're down about 1/3 of 1% on that currency pair. Coming up this hour, we'll catch up with John Stolfus of Oppenheimer as the Mag 7 bounces back. Stefan Slowinski of BNP Paribas Exane previewing Alphabet's earnings a little bit later, and Sevilla Drossos of 0.72 on what this week's data might mean for the Federal Reserve decision next week. We begin with the big issue, big tech back in the spotlight. Tech stocks driving the S&P to the best day since June. John Stolfus of Oppenheimer remaining bullish, and he has this to say. We see last week's market action as some prudent consideration by investors in addressing a need to redistribute the weighting of opportunity and risks. That said, and here's the bottom line for him, we remain positive on tech stocks, suggesting that investors don't change horses in the middle of a stream. John joins us now for more. John, good morning to you, sir.
Good morning.
Want to pick up on that last line. It's going to be a big week or so for tech earnings. Alphabet later, the bigger players next week. Are you saying stick with those winners?
I think you do stick with the winners. These are companies that have proven profitability and are deeply embedded with the lives of both business and the consumers. We're not going back to the abacus or abacus, however one wants to pronounce it, and we're not going back to the slide rule either. So I think in the process of that, we've got to see that chips indeed do rule, and where we are is the transition in terms of where they're going to be manufactured. Those are the issues.
At times over the last few weeks, we've had people come on the program and say, trim some of those winners, rotate into things like small caps and banks. What have you made of that argument that's been made?
Oh, I think it's a good one. I think that the process of diversification is necessary. It just depends upon the needs and objectives and tolerance of risk of the institution or the individual investor as to how you manage it. But you need exposure in our belief to these magnificent seven, in the sense that they are just so important. We're all on an upgrade cycle. One of them decided that the next phone that they put out is going to have a chip that you'll have to have either this year's model or next year's model. Everything underneath it becomes an anachronism. It looks like a huge upgrade cycle for laptops, PCs, phones, and all things technical as we move forward with AI. Not the Star Wars stuff of AI, but the AI in terms of where we're headed, just making things more efficient.
Was that a raging endorsement of Apple there?
I do not speak about individual companies because I manage money for the firm. So it was just, if it sounds like it, what can I say, Lisa?
Just going a little bit deeper, you were talking about not changing horses in the middle of the stream. Another aphorism was not, it was maybe try to catch some of the babies that have been thrown out with the bathwater in the near-term volatility. So have some of the big tech darlings been thrown out with the bathwater? Are those the babies that you want to catch after a little bit of a downturn recently?
Last week, it certainly was the case, and the bears jumped on the thing that it was just overdone, and this is the end of this, but I think in terms of small caps, I've built positions in small caps in a portfolio that I managed for years now under much criticism, but luckily we were well diversified, and we also included exposure to technology in other areas. So we may have we performed well within our class of what in our peers. But this is a transitional time. I believe it's a watershed. It's a watershed that's very similar to, probably unparalleled to where the automobile was in the early 20th century after Henry Ford had essentially upgraded the manufacture of automobiles by mechanizing the assembly line, bringing up quality and lowering cost. And once the genie comes out of the bottle, the technology genie, it never goes back.
You could talk about the same language, watershed moment, the genie out of the bottle, with the political cycle as well, and this real question around the turmoil in that space and what that means for markets. We were talking with earlier this morning with Brian Levitt of Oppenheimer, and he said it was basically a fallacy, this whole Trump trade, and it's been. Well, but this concept right now of this idea, how much do you look to bonds as being the real kind of volatility drivers in an election cycle?
Yeah, we think bonds are highly complementary in light of expectations that the Fed will be cutting rates. So it's a good time to pick up some things. You got to watch for your callability. Your treasuries are probably a better bet. But tax-free municipals and things like that help to diversify. But when it comes to fixed income, I'm just not a big fan of thinking that bonds are going to outperform stocks in this particular period.
Well, going back to what Brian said to us, though, he said the Trump trade was much to do about nothing. Do you start to put on some investment, or do you start to look at potentially have an election base case and start to put on some trades?
I think it's a little bit early for that. I think both sides are going to be doing the first shots across the bow in terms of what they talk about. And when they talk about tariffs, or if they're talking about tax cuts or raising taxes, all this stuff is the first part of the spin. That we have to see what actually happens.
But not all of it is spin, in the sense that Kamala Harris is likely going to be the nominee for Democrats now. She's part of a current administration, so an incumbent in a sense.
Sure.
And Donald Trump had 4 years in office, so he's also an incumbent. So couldn't you take their policies over those years and implement them into the market? You
could, but policy is often shaped by what occurs in the economy, by monetary policy. For years you'll see when we come out of a recession, whatever administration is in the White House will claim that they are what really is doing it. It's the Fed, folks. It really is. And the importance of the Fed being independent, we think, is extraordinarily important this year. If anything, we're concerned that we just hope they don't cut too soon, should they cut in September, which is all the highly leveraged crowd wants to see.
Okay, pause. Let's build on that. I think this is an interesting point. We had a guest only an hour ago who said they need to cut soon and quick and fast. And you're saying you're worried they might cut too soon.
Yeah.
September might be too soon.
I think September is too soon for one. If the Fed's detractors will say it's politically motivated and questions the independence of the Fed. The other side is inflation, as we've always said, is insidious. Having lived through it in the early 70s, I remember it very well. I mean, there's almost an element of PTSD when you see inflation come into the economic scene if you've lived through it.
You're saying it's sticky?
Yeah. I still think it remains sticky in certain areas. We haven't seen competition come back in force to battle that stickiness. And we think that the Fed would probably be best advised to, I don't doubt they'll listen to me, but I would go with November and December, 25 bips at a shot. It's a down payment for Main Street and Wall Street that says, we're going to be cutting, don't get too excited, we're going to be still data dependent. And I think Jerome Powell, does not want to spoil his legacy. He's done a pretty good job since March of 2022. He missed in the beginning, he fell by, he was behind the curve, but he got into it, and he's done a great job with 19 Fed meetings and no recession during a Fed funds hike cycle. That's extraordinary. Aided and abetted by the economy and trends that are demographic and other stuff, but the Fed's been right on.
Unemployment's still around 4%. Yeah. And I have to go back to Jackson Hole's. I think if we all sat around this table and said, can inflation get back down to somewhere close to 3 with unemployment still in at around 4, there would have been big doubts about that. You're still conditioned by your mortgage payment in the 80s, aren't you?
I am, but you've got to remember, property was so cheap back then, okay? But it looked expensive to us.
That's why I don't feel sorry for you. You had that $200,000 penthouse apartment looking over Central Park.
I love the stories. It's built up. I mean, there's a difference between the myth and the legend and the person and all that stuff.
Well, so meanwhile, going forward, I am curious, what's your most contrarian bet right now, given that you've been positive for a while? Has there been anything that's shifted?
I think the contrarian bet really that we have is that if the Fed cuts in September, it wouldn't necessarily be a good thing And if the Fed doesn't cut in September, you'll probably see the small caps pull back. They'll give back a lot of these gains, just as they did at the beginning of this year.
So just to be clear, primarily you think the small cap move has been a rate story?
Oh, yep. I believe it's a rate story, and small caps have been ignored because they're considered but longer duration.
To tie it together then, for an individual that thinks they shouldn't cut until November, how can you recommend small caps?
Oh, well, because you want to build your positions while they're relatively cheap to where they're likely to go. This is just, again, this thematic of today, the first shot across the bow.
Got it.
The interest that we're seeing in small caps.
John, appreciate your time. It's good to see you.
Great to see you all.
Thank you, sir. John Stoffers there of Oppenheimer, not PIMCO or Invesco.
Okay. Brian, I'm sorry. Brian Levitt of Invesco, not of PIMCO, not of Oppenheimer. We're trying here.
Let's get you an update on stories elsewhere this morning. It's not personal. It's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Philip Morris is higher in the pre-market, more than 2%. It reported earnings in the last hour. It lifted annual profit growth forecast thanks to blockbuster demand for its Zyn nicotine pouches, even though it has some supply shortage issues. Philip Morris has been focusing on efforts on cigarette alternatives. It said earlier this month it would spend $600 million in a new facility to make Zyn in the U.S. Annual sales of the nicotine pouches will hit as much as 580 million cans, the company said, up from its previous 560 million forecast. Delta Airways says that it expects to cancel more flights this week as it tries to recover from Friday's global tech outage. Delta grounded nearly 900 flights on Monday. That brings its total since Friday's meltdown to more than 4,700. The company said it is working around the clock to restore operations. In a post on X, U.S. Transportation Secretary Pete Buttigieg criticized Delta over this disruptions, saying the department had received reports of unacceptable customer service conditions. China's richest man is at risk of losing that distinction as losses continue to pile up. Zhang Shangshang, who runs a bottled water giant in the country, has seen his net worth fall by $13 billion so far this year. That's among the most for billionaires worldwide. The losses are tied to a price war among bottled water brands, with the Hong Kong-listed company on the wrong side of increasingly nationalistic and health-conscious Chinese consumers in recent months. And that's your Bloomberg Brief. John.
Danny, thank you. That last line is so important for anyone selling into China right now. The increasing nationalism that we're starting to see. I'm thinking about Apple again next week. If that's something that just sticks around for a longer period of time, because the surprise last time around, remember, China was better than expected coming out of Apple. I just wonder if that sticks.
If anyone listened to Xi Jinping's rhetoric in the recent meeting, in the recent confab, it was talking about increasing production, increasing just self-reliance, and fortifying their supply chains. There was not any discussion, much discussion, barely, about housing and some of the property prices, or potentially even consumer spending.
We talk a lot about the prospect of protectionism, increased trade barriers on this side of the story, and maybe not enough on what's happening on the other side. Up next on the program, we'll get you some morning calls, and then we'll catch up with Stefan Slavinsky of BNP Paribas Exane, looking ahead to Alphabet earnings out after the closing bell. All of that and more still to come from New York. You're watching Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Equities changed on the S&P 500, going nowhere, into the opening bell about 1 hour and 12 minutes away. Let's get you some morning calls. First up, Baird lowering its price target on CrowdStrike to 335, keeping an outperform rating on the stock, but the firm saying that financial and legal ramifications remain top of mind after Friday's global tech outage, and apparently some airlines, Delta, still struggling with that. That stock is up by 1.3% in the pre-market. Next up, Morgan Stanley upgrading Snap to equal weight with a $16 price target. The analyst highlighting improving ad performance and a more reasonable valuation compared to its peers. That stock is higher in the pre-market by 3%. And finally, Piper Sandler raising its price target on Microsoft to $485, maintaining an overweight rating. The firm highlighting that it could take just 3 years to add $100 billion in cloud revenue thanks to AI, as compared to the 13 years it took to cross the milestone the first time. That stock is up at a pre-market in early trading by about 0.25%. Looking ahead to the big tech earnings through the next week or so, BNP Paribas Exane raising its price target on Alphabet to 210. Analyst Stefan Stavinsky saying inline might be the new beat and raise this quarter. Investors waiting to see whether the generative AI hype will continue. Stefan joins us now for more. Now, Stefan, typically when we talk about inline being the new beat, usually that's relative to pretty downbeat expectations. Now, Stefan, I'm looking at the stock this year. Google's up by 30% year to date. How can inline be the new beat?
Yeah, hi, Jonathan. Thanks for having me on. And obviously, in the last few weeks or a couple of months, we've seen some sluggishness in IT demand overall. I think more on the software side. We recently published our channel checks on enterprise software, which did show significant weakening over the last 3 months. And so we're seeing in some areas of tech, like we're seeing today on SAP, for example, where last night they came in line on revenues, in line on bookings. Stock is up 5 or 6% because of concerns. I do think it is a little bit different in the digital advertising space. I think for Meta and Google, expectations have been creeping up. So maybe for them, they do need to beat in order to continue the momentum here.
Stefan, just on ad spend, just breathe some life into that conversation. Help us understand your perspective. Are we saying there's a pullback in ad spend? Is it certain industries, certain markets? Where are you seeing that?
No, I definitely think that within ad spend, it's been holding up better than IT spend. So we have seen more weakening on the software side, the services side, with digital advertising holding up better. That said, we do have a digital ad tracker that we use for our forecast for Google and Meta. And they're both coming in pretty much in line with consensus, actually maybe even a smidge below when you include FX. So we're kind of in line. Last quarter, we weren't. Last quarter, we raised our numbers going into results for Google. We were 3% ahead, and they did beat by 3%. This quarter, we're just in line. But we do see other benefits. We think on Google Cloud, we could see them beat as they benefit from using Gemini to drive customers to Google Cloud Platform, benefit from Gemini for Workspace and their SaaS business. And we also think on the margin, they're continuing to stick with that sort of extended year of efficiency. We should see GAAP margins once again above 30%. So we see a bit of a mixed quarter for Alphabet coming up here tonight.
Stefan, I want to just sort of dig into the mix of that, this idea that the inline may be the new beat and raise, as long as there is a beat under the hood when it comes to cloud, as long as their capital expenditure budget continues to increase and beat expectations so that they can invest in the future. Is that kind of the asterisk next to this sort of inline as the new beat and raise?
I think the broader debate here that we've been having with institutional investors over the last few weeks has been sort of the hardware versus software trade, but also hardware versus software versus large cap internet. You know, the SOX is up 33%, large cap internet is up around 31%. Software is only up around 9%. So one of the things that we're just cautioning about is that second derivative. Beware of the second derivative. We will see growth slowing here in digital advertising year over year. We will see growth slowing probably for some of the big hardware names. I think on the software side, it's underperformed this year to date. And actually, we have companies where software revenue growth is actually accelerating. So I think on the software side, we're seeing maybe a bit more opportunity in the second half of the year than maybe large cap internet and hardware for the time being.
There's also kind of an elephant in the room, Stefan, especially after the whole CrowdStrike issue that really highlighted how many companies use CrowdStrike on their Microsoft software in order to ensure against cybersecurity attacks. It raises this question about sort of the liability of being too dependent on one particular provider. Do you expect that to come through either in the earnings or in regulatory risk that a lot of these companies are facing anew?
I don't think so. I think it's not necessarily something new. And I think, obviously a lot of enterprises, when they're buying IT, try to diversify to a certain extent. So maybe we'll see that creep up more in the risk sections of 10Ks, but I don't think it really changes buying patterns. I think the other thing to mention here is when you do look at the various different components going into the second half of the year, and the political risk around some of these companies with elections and tariffs and rhetoric. Again, on the software side of things, you don't have that. Most of the large cap software companies, even Microsoft, have very limited exposure to China. You do see that more, of course, on hardware and even potentially the large cap internet names being impacted from advertising trends where the Chinese are large advertisers on some of the big internet platforms.
Stefan, if you're worried about political risk, is that why you haven't underperformed for Meta?
It's a part of it. I think the market was looking at political risk on Meta as a potential tailwind with the banning of TikTok. We didn't really think that would kind of play out just because a lot of vested interest in making sure that TikTok stays up and running in the U.S. And certainly looks like, based on President Trump's recent comments, that he would allow TikTok to stay up and running. And actually, so that could turn into a headwind for Meta. So that is a challenge. Again, with the elections as well, it's uncertain if advertisers will want to be associated with user-generated content during an election cycle. Maybe they will, maybe they won't, but that's another risk. But our caution there is a bit more on their AI spending and reallocating spending from core AI, which is driving growth, and that's their recommendation engine and ad targeting technologies, to Gen AI, which is the large language models, Llama, and the Meta AI services, which aren't driving revenues yet. Now, if we do see Meta next week say that they're going to be cutting Reality Labs spend to invest in AI, that would be a positive catalyst. But for now, they're saying that Reality Labs losses will continue to accelerate.
Hey, Stefan, great to get your thoughts going into these alphabet numbers a little bit later with some real thoughts about the likes of Meta as well at the end there. Stefan Stavinsky there of BNP Paribas Exane. Fantastic exchange with Emily Chang and Mark Zuckerberg. And I have to say that one clip, I saw that absolutely everywhere over the weekend, as Mark Zuckerberg comes out and says that he thought the former president's reaction to that assassination attempt was one of the most badass things he'd ever seen. And I think we all thought, listening to that, being aware of the conversation we just had, that sounded like a guy that was maybe trying to cozy up to the former president just a little bit.
100%, because he also went into saying he's not going to really endorse one candidate or another. This is someone who's trying to play his cards right so he avoids some of the crosshairs of politics.
Coming up next on this program, we'll catch up with Sophia Drossos of Point72 alongside Mark Giannoni of Barclays. From New York City, this is Bloomberg. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So just before the commercial break, we mentioned that sit-down, that conversation with Mark Zuckerberg of Meta and Bloomberg's Emily Chang. That interview, I know many of you have seen the clips, that one clip, that interview in its entirety, a little bit later on Bloomberg TV at 6:30 Eastern Time. Don't miss it. Equity futures on the S&P about an hour away from the opening bell look a little something like this. We're down about 0.1%. Yesterday, fantastic day of gains across the board here. Best day since early June on the S&P 500. Nasdaq had a stellar day as well, driven by Mag 7 stocks. The big names, the likes of Nvidia bouncing back. Going into earnings over the next couple of weeks for big tech. You've got to wait until the end of August to hear from Nvidia. Nvidia's a big deal now. Can they sort that out? Can we bring that in?
bring that earlier because we just have to wait for them.
I think we have to bring that in.
Okay, we'll submit a call.
Whoever sits down with Jensen next, bring that in. That's one request for earnings. The other request, bank earnings. Just do them after the bell.
Oh no!
You know how I feel about bank earnings.
Yeah, I know. You want to be able to digest
Everyone's
them.
Busy in the
and
morning. They haven't got time to listen to their calls.
But that they
go
do.
through the numbers.
They do. We then have to break them in a sort of haphazard way.
It's a bit of a rush. You sort of scream through a bunch of numbers.
Exactly.
And, yeah. Maybe they like it that way. I don't know. All right. That's the equity story, not much of one I know. In bonds, we look like this, 2-year, 10-year, 30-year. The 2-year shaping up as follows. Yields down by about a basis point, 450.83. We're down a single basis point on the 10-year, about 423.69. I want to turn to foreign exchange and finish on the Japanese yen. We'll talk more about this in just a moment. Dollar yen 156.23, negative 0.5%. That's a stronger Japanese yen every day this week, Monday, Tuesday. Going into next week, real conversation about whether or not we get this hike from the BOJ.
Which raises the question, is the strength we're seeing in the yen because of a Bank of Japan likely policy shift, especially considering the fact that they came out and kind of put a little cold water over the idea of it, talking about some of the weakening in consumer spending in Japan, or raising questions around their confidence to really tighten policy? Or is this a U.S. story entirely? Is this basically the idea that a red sweep and some of the more protectionist policies would strengthen the dollar? That trade, at least people are closing out a little bit, and that's giving some steam to the yen.
Well, at least we know that if we get Trump Volume 2, he will have a close partner in Japan because they'll agree on the same thing. The president wants a weaker currency and they want a stronger one. Doesn't that all add up? Doesn't that work?
You know, keep
Dollar
going with
back
that.
to 100?
I mean, all I can say, did you read all of the scathing notes about how is he going to get that? That's absolutely ridiculous.
I guess he needs a Treasury Secretary that's just going to, buy a lot of yen?
I'm not sure he'll engineer that. I'm not sure how you engineer that.
The
Especially if you're going to have big tariffs and cut immigration aggressively, you'd think that would outweigh everything else.
This is the reason why I think people are having a difficult time understanding what the Trump trade actually looks like, because there's a lot of speaking out of all sides of the mouth and a lot of train of thought. It's unclear whether that's actually policy, and you don't know who's going to be in the office. And then when you actually look at the policies and you put that against market reaction, and then his goals.
The backdrop is so different too. In 2016, we were pleading for fiscal stimulus.
Right.
We had low growth, we had low rates. I think we sat on this program all the time saying, yeah, you should probably do something. Even the chair of the Federal Reserve was testifying and saying, yeah, you guys should probably do something. Backdrop now, totally different.
Which is a reason why bond auctions matter. We're going to get $69 billion of 2-year notes today. We're going to get $70 billion of 5-year notes tomorrow and $44 billion of 7-year notes on Thursday. This, to me, is a real presidential trade, because either way, you are going to get a fiscal deficit that is larger. And now you got to wonder, okay, how do you offset that on the margins? And that's where I think there could be the most volatility.
Okay, that's your conclusion to everything. All right. Top stories. Under surveillance this morning, I agree it matters, just every story. Okay. Shares of GM, General Electric, Coca-Cola, rising in the pre-market. The companies all reporting quarterly results that beat Wall Street estimates. On the flip side, UPS missing profit estimates amid rising pressure from wages and soft package demand as well. UPS is down about 8%. Lisa, do you think we can park that story this morning, say it's idiosyncratic and focus on the rest, or is that too easy, too simple?
I would suggest it's too easy and too simple, especially in light of what we heard from the airlines. It's not just higher expenses. It's also lower package revenue. I'd be curious to see what we see from FedEx, other places. You can't ignore certain signs of weakness. It's just hard to know how to put it together with the signs of strength that we're seeing from the likes of GM, from the likes of Coca-Cola, from the likes of the banks that are posting record profits. It is very difficult to understand whether we're seeing weakness, as evidenced by the lack of earnings growth that we're seeing in the Russell 2000, or true strength, the fact that people are still buying big trucks and going crazy with them.
Over at GM, earnings season picking up big time later. We'll hear from the likes of Tesla, and we'll hear from the likes of Alphabet. And then tomorrow morning, Lisa's going to draw that all back to the deficit in America and the bond supply you get later this week. I know you will.
I know.
Kamala Harris starting to pick up key Democratic endorsements. That list now including former House Speaker Nancy Pelosi. CNN reporting that Senate Majority Leader Chuck Schumer and House Minority Leader Hakeem Jeffries are expected to endorse Harris soon. Scene, okay? New York City, breakfast, okay? I'm eating, I'm chill. Bit of scrambled eggs, decaf cappuccino. Just relax, just a little bit. Can't handle the caffeine. Don't need to come back up after the show. All right. Poor Chuck Schumer. Walking through the restaurant. What does this one do? Anne-Marie, like a shot. Just leaves breakfast like a shot. You're going to endorse Harris. You're going to endorse Harris. What did he say to you yesterday?
He said, I'm not making any comments. And then I said, okay, well, when are you going to potentially make a comment? He said, I have a statement later today. So I said, are you going to endorse her in your statement later today? He goes, do not put words in my mouth. I'm making no statements. And then he rushed into a car.
If you are an official and you go into a restaurant and you see this one, just turn around and go back to the exit.
We need to know answers.
Okay.
Everyone was coming out. Where was he? He was the one that was supposed to have this come to Jesus moment with Biden in Delaware. So where was his endorsement?
True. I think we're still waiting, right?
Still waiting. Potentially it's going to come today.
Okay, look out for that. Let's turn to this. Investors keeping an eye on US data this week, including GDP and PCE. Both prints will paint a better picture of what the Fed's next move will be. Fed officials are expected to hold rates steady once more at next week's meeting. Markets still broadly pricing in 2 cuts this year. Joining us around the table, I'm pleased to say, still with us, is Sophia Drosos of Point72 and Mark Giannoni of Barclays. Sophia, I want to come to you first. The likes of Goldman have come out and said, why wait, let's go. They've sort of put forward this argument that maybe the Federal Reserve should consider cutting interest rates this month. Do you share that particular view? Because we had another guest on in the last hour who said that they should wait, and maybe they should wait until after the election.
Well, good morning, and that's definitely a debate in the market. But what I would say is that this is a very unusual cycle. The Fed's not facing the urgency of needing to cut because the economy is falling apart. Usually when the Fed is turning around and pivoting to rate cuts, we see more material weakness in the economy. This time around, it's not what we're seeing. This time around, we are seeing the economy hold up well as price pressures recede, and the Fed's making a judgment that it can cut back on the amount of policy restraint it has delivered to the economy. So there's not the same urgency. And while you can sort of discuss the fact that inflation has probably come down a little bit faster in the last couple of months than was expected, the Fed doesn't need to be in a rush. And it's a very consensus-based institution, as you know. So perhaps it's this meeting where the Fed gets its ducks in a row and unveils its strategy for reducing the amount of monetary restraint.
And that's why there's broad consensus that September may well be the month they actually make a move. Mark, I'll throw the same question at you. Goldman say, why wait? It's interesting that you indicate that you think, sort of, why not wait? Why not wait?
Yeah, good morning. Yeah, I think, I mean, the question for us is what's the rush? The inflation has improved a lot. So yes, it has come down. And particularly in June, we had like a lot of improvement. But we've known, I mean, we've seen, you know, in the first 3 months of this year that inflation bounced back again, like for a few months before coming back down. So I think the situation that we are in is one where inflation is gradually trending down, but we'll have likely a few bumps along the road. And on the labor market is still pretty solid, pretty resilient. We still create about 200,000 jobs. The unemployment rate edged up a little bit, but we think this is largely due to the boost to supply of labor coming from immigration. So we don't see any signs of a rapid deterioration. And you noted before that consumption, we'll have some information about that later this week, but we think that so far the signs are, based on retail sales data, for instance, that consumption is still very resilient to this point.
Mark, you raise a point that actually flies in the face of what Ian Shepherdson was making earlier this morning, where he was saying he thinks the Fed could cut by 150 basis points in the next 18 months or so, possibly more, just simply because inflation is falling so quickly and will continue to do so. You seem to think that actually the Fed isn't that restrictive, and we're seeing an economy that's handling just fine, the rates where they are. Can you explain sort of why you see inflation as stickier and rates being closer to neutral than not here?
Yeah, so I think, this economy still generates a fair amount of income. Every month, we keep hiring about 200,000 jobs. With these jobs, create a lot of income. That income keeps fueling consumption. So the consumer turns around, buys all sorts of goods and services, and that keeps pressure up on prices. So yes, we are seeing the trend down. Inflation is no longer as high as it was in 22, 23. It's improving. But hey, on a year-over-year basis, we still have around 3% inflation, depending on what indicator you look like. And on a year-over-year basis, conditions are going to deteriorate going forward. So the improvement that we are seeing is really on a month-to-month basis that we see these inflation prints gradually coming down, and we could have a lot of surprises on the upside as well.
Sophia, do you agree with that right now people are not really understanding to the full degree how much inflation is sticky and could inflect higher in the months to come in a way that maybe people are saying is sort of out of the picture right now as they project Fed rate cuts?
Well, I think the beginning of the year, the disruption we saw to the disinflation process was really driven by some idiosyncratic factors, whether it was some one-offs here and there in specific categories or mismeasurement in rents and the like, and certainly some of the typical beginning of the year seasonal pressures that you see in prices. So from my standpoint, I think inflation really does now, if I look at the month-on-month run rate, I'm relaxed about where it's headed. Obviously, we want to see it continue to move in that direction. But really, the Fed, I think, has changed the balance with regard to how they're looking at things. They're talking a lot more about not wanting to overstay their welcome, not keep policy overly tight or tighter than it needs to be. And I think that the market is catching onto that. And of course, we've seen the big shift in market pricing of Fed expectations in the last few weeks.
Mark, you talked about Trump momentum riding high. Do you still see that potentially, given the fact that we have basically a restart of the election?
So, yeah, well, I think there is, if we look at just at the market probabilities, it looks like the Trump administration has an advantage to this point, but we can see a lot of changes in the next 100 days or so. So I think there is, it's going to be a pretty close race in any case. At this point, I think the Trump administration would generate some upside risk to inflation as well going forward, but this is more 2025, 2026 problem than it is a 2024 problem. I don't think that that's going to affect the Fed's decision this year, but this is something that could impose some upside risk to inflation next year.
Hey, Mark, thank you. Alongside Sophia, to the both of you, thank you very much. Just want to bring you some news just quickly. Those of you struggling with Delta Airlines over the last few days, this from Secretary Pete Buttigieg, the Department of Transportation opening an investigation into Delta Airlines to ensure the airline is following the law and taking care of its passengers during continued widespread disruptions. All airline passengers have the right to be treated fairly. He goes on to say, and I will make sure that right is upheld. Let's get you some stories elsewhere with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Big tech earnings are going to be kicking off in the afternoon. Both Tesla and Alphabet will be reporting. For Alphabet, analysts are likely to be focusing on the Google parent company's AI-based revenue. It is looking to compete with the likes of OpenAI and Microsoft. Now, for Tesla, investors want answers about its delayed robo-taxi rollout, as well as CEO Elon Musk's move to elevate AI over EVs. Now, elsewhere, VP Kamala Harris is hitting the campaign trail with a rally in Milwaukee later today, where Republicans just held their convention last week. Harris has secured the endorsement of nearly every major Democrat and announced a record-breaking fundraising haul of more than $100 million during her first day as a presidential candidate. Taiwan has suspended trading on its $2.4 trillion stock market as Typhoon Garmi approaches landfall. A government statement also said that Taiwan would shut schools and offices in Taipei. The intensity and size has increased, and the trend is expected to continue with wind gusts of up to 118 miles per hour. The typhoon is expected to make landfall sometime Wednesday night in the early hours of Thursday. And that's your brief, John.
Danny, thank you. Up next on the program, Larry Kolb, the GE chairman and CEO, sitting alongside our good friend, Bloomberg's Guy Johnson. Must-watch TV up next on the program. This is Bloomberg.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera, and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
Was going to keep bringing World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Equity slightly softer here. We're down by about 1/10% on the S&P. The opening bell in about 44 minutes' time. Let's cross over to Guy Johnson in Windsor, England. Sounds very official and royal, doesn't it? Sitting down with the GE CEO, Larry Kolb. Guy, over to you.
Yeah, we've got some aerospace royalty here in the room. As you say, Larry Kolb, the CEO and chair of General Electric, the world's biggest jet engine manufacturer. John, this is a company that is newly independent. It's a standalone business. The first time we've seen numbers being reported on that basis, and the numbers we've seen being reported look good and being taken well by the market. The stock, I think, is up circa 3% this morning. It looks like a beat and a raise from Larry Kolb. Good morning. Good afternoon, as I probably should say. Nice to have you with us. Thanks for joining us.
Guy, good to be with you.
Talk me through the strength. Talk me through where it has come from. Where is the strength of this beat and raise within the business?
Well, Guy, it's really rooted in the demand that we see both from the airlines and from the airframers for more of what we do. 70% of GE Aerospace on a standalone basis comes in the aftermarket, supporting the airlines with parts, with services of all types to keep today's fleets in the air. And given the activity that they're seeing with the flying public, it's all we can do to keep up with what they'd like to see from us. So the 60+% improvement in earnings, the nearly 20% improvement in free cash that we announced today is really a function of the strength that we're seeing in our commercial engines and services business in the aftermarket.
Is that sustainable? Does that carry on throughout the rest of this year into 2025? Is that something that is here now, gone tomorrow? Because we're starting to see some warnings coming through, particularly from the narrow body operators in the United States and as of the beginning of this week with Ryanair here in Europe.
Well, we've certainly seen those as well. Seems like that commentary is really geared more toward pricing than anything else. But if you look at our order book in the second quarter alone, nearly 40% year over year. We see our utilization of the fleets, both the mature fleet, which we power with the CFM56.
Yep.
That has been steady, an engine that folks thought might begin to fade. Our newer generation technology, the LEAP engine on both the 737 MAX and the Neo at Airbus, that's probably up 4 points in terms of share. So our utilization could not be higher. Even just looking at the third quarter here, we have probably 90% of our third quarter projection in backlog today with respect to parts. So in terms of the demand signals we're seeing from our customers, things are strong.
So the hours being flown are going to remain consistent, you think?
We believe so. Okay. And going forward, they're going to increase.
That's the kind of the older story. That's the existing fleet that's already out there. As you say, the maintenance story is very strong. The margin off that is very, very strong. The story certainly at the Farnborough Air Show and all the air shows recently and throughout this industry has been what has been happening with the supply chain. Airbus lowering its guidance for the year, talking about engines within that guidance. Is the supply chain story getting better or is it getting worse?
Guy, I'm strongly of the view it's getting better. It's really all about the rate of improvement.
Right.
And what we shared earlier today with investors is that we didn't have the output that we had anticipated in the second quarter with our newest generation engine in particular, with our LEAP engine. But we're going in using our flight deck, our lean operating model to help our suppliers help us. Jointly problem solving, really understanding constraints at the point of impact. And we saw tremendous results from that in the second quarter. Didn't translate into as many deliveries, perhaps, as our airframer customers would have liked, but we saw 2/3 of the suppliers that we worked with improve their output to us by nearly twofold. So that's encouraging.
Just kind of talk me through what's happening. So originally the guidance was for a 25% improvement for that engine. Then you went, I think it was in April, you were kind of 10, 15. Now you were at kind of flat to 5.
Exactly.
That feels like it's not getting better. You're telling me that it is, though below the surface, getting better.
It's not getting better at the rate that we had anticipated.
Yeah.
But it's getting better if you look at the sequential trends. And that, from an operating perspective, that's all that really matters. Week in, week out, quarter in, quarter out, are we seeing more and are we seeing more predictably?
Okay.
We're getting better in that regard. I'm encouraged by what I've seen here just in the first 3 weeks of July. A lot of work, not only in the second half still in front of us, but as we think about 25 and 26, but working in that way, yielding those sorts of results will, I think, put us all on the ramp.
So the benefit comes next year. That's when we start to see the big benefit coming through.
I think some of the actions that we took in the second quarter will help us in the third quarter and in the fourth quarter of this year.
Why is it taking, this was a question I put to Guillaume Faury a little bit earlier on, why is it taking so long to resolve this issue within the supply chain?
Well, I saw Guillaume yesterday. We talk about this every time we're together. I think it's important for everyone to remember, Guy, that we turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience, technical people throughout the supply chain, in Guillaume's facilities at Boeing, at GE Aerospace, and throughout the supply chain. We're building all of that capability back. And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
He told me this morning he thinks we've probably got another couple of years of it to go, though, until we resolve some of these issues. Does that timeline feel kind of about right to you as well?
We're trying to make progress every week, but I think this is a multi-year effort that the industry faces.
In terms of your, we bring up Guillaume Faury, how is your relationship changing with Airbus? You've traditionally been really tight with Boeing. Tom Enders, who I know well, you know well now, is now on your board. Does that signal a change in relationship with Airbus?
Well, I think we have served both of the major airframers well over time, right? We don't have over 2/3 of the departures in the narrow-body space serving Boeing alone. We're very excited about the news we put out last week with the A321 XLR now approved, right, our engine. So there's a lot that we're doing with Airbus, not only in terms of the ramp, but next generation technology as well. And we're trying to be as strong and as good a partner to Guillaume and Christian and their teams as we possibly can be. We want to do the same thing with the folks at Boeing, of course.
Yep.
We can do that as long as we invest in technology, use flight deck to deliver safety, quality, delivery, and cost to their requirements, and jointly serve the airlines.
Defense, just spend a moment, if we can, as we conclude things, talking about defense. Do you think defense spending is going up? Do you think a Trump presidency would mean greater defense spending? Do you see defense spending going up in Europe in a Trump presidency because of the requirements in terms of debt to GDP, not debt to GDP, spending to GDP? How do you see that story progressing, and what does it mean ultimately for GE?
Well, I think on both sides of the Atlantic, given the authorities that I speak with, spending will be paced by the threat, and the threat is only increasing. Therefore, be it in combat aircraft, be it in rotary craft, the two areas that we serve most directly, we think we will see, looking out over the next 5 to 10 years, sustained growth.
Just one final quick question before I'm forced to throw back to the studio. Was it an easy decision to continue your contract? Can I 100% rule you out of the Boeing job?
How about 101%?
101%. There you go. 101%. I know the guys in the studio were talking about this a little bit earlier on. So 101%. There you go. John, Lisa, 101%. Larry Culp is staying at GE, and a fantastic set of numbers delivered earlier on today. Looks like the market likes what it hears. Back to you.
Hey, Guy, thanks, buddy. Thanks for that. Really enjoyed that conversation. Larry Culp, the GE chairman and CEO, sitting alongside our good friend, Guy Johnson. That's the end of that then, right?
It's not. He didn't say it was 102%. It could have been 105% sure. So we're not sure whether or not he can actually join.
Just a few days ago, the president of the United States was 100% running for re-election, and then all of a sudden things change in a dime.
Things change, but I think we know his position as things stand currently. Need a Nancy Pelosi, like the equivalent over at Boeing, say, yeah, you know, like, we're waiting for his decision.
Exactly.
Right. Yeah.
All right. We'll wait until he gives us his decision, but he has to make a decision because the clock is ticking. I'm not going to do it. Well, you know, it's
waiting for his decision.
Come on, keep
working. The team over at Boeing. Let's get to the trading diary. The week ahead looks a little something like this. President Biden returning to the White House today after ending his re-election campaign. Later on, we'll hear from Alphabet and Tesla reporting earnings after the closing bell. Tomorrow, Israeli Prime Minister Benjamin Netanyahu giving an address to Congress. And we get more earnings from Ford and IBM. Plus, we'll get some US PMIs, Thursday, GDP, and another round of jobless claims. And we'll round out the week Friday with unmatched, consumer sentiment, and PCE. Tomorrow morning, we'll hear from Greg Battle of BNP Paribas, Ben Callow of Baird, Kate Moore of BlackRock, Sebastian Page of T. Rowe Price from New York City. For this morning, that does it for us. Thank you for tuning in to Bloomberg TV. This was Bloomberg Surveillance.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Just looking at your portfolio of businesses, it is about resilience, it's about pressure, it's about women. Like, how does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
All right, we're looking at futures that are lower across the board. 30 minutes for that to turn around. I'm Matt Miller.
I'm Shanali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, earnings season kicks into high gear. It's been a mixed bag of results this morning. And next up, Tesla and Alphabet test EV and AI demand.
Speaking of Alphabet, cybersecurity startup Wiz turned down the tech giant's giant takeover bid, opting for an IPO route instead.
Plus, politics remains in the spotlight with Kamala Harris's campaign picking up steam, endorsements, and record-breaking donations pouring in. Let's take a look at where markets are trading about 30 minutes until the bells ring. Like Matt said, it's a mixed picture behind me. You can see the S&P 500 just about unchanged in pre-market trading, maybe a little bit lower. Big tech, meanwhile, taking a dive here. You can see the NASDAQ 100 down about 0.2%. Then you take a look at the bond market, a little bit of a rally building. 10-year yields down about 2 basis points.
But not much, right? Futures are giving me the summer doldrums vibes today. And actually, that's fitting. Look at this. The white line here is an average of the S&P's returns from 1993 till 2023. So over the last 30 years, this is historically the time when we trade flat. Can that change with earnings?
Speaking of earnings, we're going to take a look at some stocks moving before the market opens. UPS reporting profit that fell short of Wall Street estimates. UPS down pre-market more than 10%. Also keeping an eye on Google after cybersecurity startup Wiz turned down their $23 billion takeover offer, yet Alphabet shares marginally up, pretty much flat before they report earnings later today, Matt.
All right, earnings is getting me very excited today. There's a lot of cool stuff going on. Last night, it kind of kicked off for me because Porsche released some really disappointing earnings. Of course, trading over in Frankfurt, those shares are down. And then today, GM released some really good earnings. Everybody in America seems to be buying a General Motors pickup truck.
And of course, the party continues for you because we have Tesla coming up after the bell. Of course, really interesting autos conversation there, in addition to AI, because Tesla, as we know, increasingly wants to be an AI company.
And it's interesting, we have a lot of divergence in the market today. If you look at it, tons of companies lifting their outlooks, but equally some falling short. This is where that big debate starts about the state of the U.S. consumer.
But not equally, right? Way more companies, you sent a list around earlier, way more companies are lifting outlooks than those that are falling short.
Excited to see the market reaction. The fact that we're so flat tells me that markets are still expecting more than what we're putting on the table.
This glass is half full. All right, let's get to politics. Vice President Kamala Harris's campaign says it has raised over $100 million since Sunday. She has enough delegates for the Democratic nomination for president already as well. Harris spoke to the media in Delaware.
We are all here because we love our country, right? And we believe in our foundational principles. We believe in freedom. and opportunity and justice, not for some, but for all. We are going to win.
For more on Harris's presidential campaign, we're joined by Bloomberg's chief Washington correspondent, Anne-Marie Jordan. Anne-Marie, so many milestones in such a short period of time. She has rallied a ton of Democratic support behind her.
Yeah, and I think you need to take a little bit of this with some grain of salt. Donors, pretty much, that money coming in was drying up because there was concern about whether or not Biden was going to step aside. And then if it wasn't going to be Harris, that money, who was going to be able to tap into it? What was so interesting about the money, though, that did come in was that 60% of that money were first-time contributors to the 2024 cycle. So this just shows that there is a restart, and she is trying to revamp and a resurgence to bringing back the base into the camp. So, yes, this is a great start for her, but obviously we have to see you know, how she continues, because right now she is still down in the polls. So are her policies and what she goes out and talks about, is that going to be enough? I still go back to this poll a few months ago by CNN. 55% of Americans felt that the Trump presidency was a success when you talk about the policies. And when you look at the Biden-Harris administration, you ask those people, they say it's only about 39% a success. So how does she differentiate herself as well from the current administration?
It's a stark difference.
It is a stark difference. And I think one thing you're going to see, and she talked about this yesterday, is she's really going to lean into reproductive rights, because this worked in the midterm elections. This got a lot of suburban women out to come out and vote, even in red states when there's referendums and special elections based on abortion. And the midterms, this worked. Will it work for the general in November?
You know, one question I have, too, is how she might start to differentiate herself from President Biden on certain policies and really distance herself from some of the things that have been very controversial or not even working out in a lot of people's eyes. For example, how she treated border policy when she was kind of dealing with Central America here.
So there's not going to be a lot of daylight between Harris and Biden. She was the VP, but there's three things you could potentially look at. One, yes, the Republicans are already coming after her on immigration. She was given this task of March 2021 from Biden to look at the root causes of immigration, not necessarily the border, that would be under Mayorkas, but clearly this has been seen by many in America as a failure, or there's deep concerns about it. The other thing I would look at is she's not going to be presiding over Netanyahu's address to Congress. She's going to be out on the trail campaigning now. She was the first one in March to say we really need a ceasefire. And some of the reporting that has come out behind the scenes was that she was nudging Biden to really be a little bit more heavy-handed when it came to Netanyahu. And then, of course, the third big thing I mentioned again, reproductive rights. You really don't see Biden wanting to talk about an abortion. He's a Catholic. He doesn't feel comfortable. It's almost awkward. She has been the face of this, and she's going to take that fight. And I would say today is really interesting because she's going to Milwaukee, and she's going to be joined by Senator Tammy Baldwin, who recently, when Biden showed up in Wisconsin, in Madison, Tammy Baldwin did not go to his event. She was trying to distance herself. So whether or not Harris can get over the finish line November 5th, what you're hearing from Democrats is that they think this is actually going to at least help down-ballot races.
And of course, it's interesting in and of itself that she's kicking off in Milwaukee. Of course, you and the rest of the team was just there for the RNC. Anne-Marie Jordan, our chief Washington correspondent. Thank you so much. Let's bring this conversation to the markets now with Dana Diorio. She is InvestNet co-chief investment officer and group president. Obviously, the politics conversation really taking up a lot of airtime, but we also have the Fed. We also have earnings, but I'm curious, in your role as co-CIO, just how closely are you watching the polls and the general conversation around politics evolve right now?
Yeah, I think there's no avoiding it, right? You know, and certainly it's been very interesting even in the last week, because obviously after the debate performance and, you know, what we saw in markets, and I think it's very interesting actually because there's so much news around, you know, politics, but the markets are sort of this real-time indicator and voting mechanism for how people feel about the election. So after that debate, you know, you saw a big bump in the Trump trade, right? And you saw energy doing well and financials and, you know, just expectations that are associated with a Trump win. And now, of course, you know, with this change in, you know, who the Democrats are putting up, there's a shot in the arm there. And you see markets sort of maybe taking a breather potentially on that Trump trade, right? You would expect potentially, you know, sustainable stocks get a little bit of a bump and energy stocks take a little bit off.
How closely, Dana, are you watching, though, the polls? How closely are you watching the betting markets? I mean, is that something that's on your dashboard and you look at every day?
No, I can't. Well, yes, from the standpoint of, being a person that lives in this country, I would say, but not from the standpoint of, do I expect markets to reflect polls? I actually think, yes, to a certain, the market's going to price in known information. So the polls, to the extent that, folks are watching that, and there's nothing else going on, right? Like all else equal, if the polls are moving in one particular direction, you might see the market reflect that. But I would actually put it back and say, look, the market's its own reflection, right? The market actually is another mechanism for voting and voting with your feet. So and the market's a leading indicator. So I do think that, you do see movement in obviously some of these sectors and some of these individual country stocks even based on this. And I look there for more information than the polls themselves.
Dana, if we think about the market voting with their feet, if you look at Fed swaps, you also see the market really still betting on at least 2 rate cuts this year. Do you need those 2 rate cuts to hold this market up?
That's a great question. So obviously we've come a long way, right? We started the year at 6 rate cuts. That expectation has dropped a lot. I think what's really interesting about the rate cuts is that, yes, the inflation report being, very satisfactory is obviously fueling expectations. And then you have, of course, does the Fed always seems to cut in an election year, right? That just seems to be the politics of it. But you also have to ask, well, are they cutting because there's an expectation that this soft landing is a little bit in danger, right? I mean, you're looking at cutting rates at a time where valuations are extremely high. So there's a little bit, and unemployment is still very strong. We've seen a little bit of, a cooling in the employment market, but not much. The labor force participation rate went up. So the little drop in employment, the little gain in unemployment is partially related to that. So you've got a strong labor market. You've got, yes, cooling inflation, but at the end of the day, not still where the Fed wants it. The question becomes, are the rates being cut because we can or because we think we need to? In which case, that potentially portends poorly for the market.
And Dana, I want to get your thoughts on small caps, because much has been made of the potential rotation that we've seen over the past 2 weeks. Whether it's still intact is up for debate. But you make the interesting point in your notes that you think about small caps. You think about that there's still a lot of junk small cap companies. And then you think about the fact that a lot of companies are choosing to stay private right now that could have been good small cap companies helping the index. Where does that leave you on the sustainability of this rally?
So this is another great question, right? I mean, obviously we've seen a broadening out where tech and communications have really driven this market. And of course, even, you narrow that down even more to our Magnificent Seven and related AI stocks. And then all of a sudden you see this broadening out because of the expectation of rate cuts. And, small caps are interest rate sensitive. So the expectation that we have more rate cuts helps them. But the point you're bringing up is very important. You still are in a place where 40% of small caps are unprofitable, which is above the average, right? And when you look over time at why small caps tend to actually outperform over time, a lot of it is small companies that do well. So you've got certain small companies, and it's really hard to identify those ahead of time. So you're investing in the overall market because some of those small companies are going to do really well and they're going to get big. Well, what happens when that is happening in the private markets, not in the public market? So it's private investors that are getting the benefit of that big innovation jump. It's not happening in public markets. It's a very interesting question for the research that we have out there around the long-term outperformance of small caps. I don't think it's to say you should not have small caps. Diversification, I think, is a very good thing to have in the portfolio, but it calls into question some of this longer-term empirical evidence that we have.
All right, Dana, great to get your take. Thanks so much for joining us. Dana D'Auria from InvestNet. Now, quick check on some of the companies that have been out with earnings this morning, and there have been a lot. Let's take a look at how they're faring here. Coca-Cola is one that you brought up, which I think is really interesting because remember Pepsi didn't do so well.
No.
I think it had to do with the product mix. Pepsi sells, the majority of their products now are snacks rather than drinks. And Coke, of course, sells mostly drinks. Mm-hmm. If you're a health-conscious consumer, you're more likely to pick up a water from Coke than you are a bag of Fritos, as delicious as they are, from Pepsi.
So, I mean, that assumes that the people who are mostly buying Coke products are buying water, which I don't know if that's necessarily true.
Well, also their pricing was up across the board, right?
That helps.
Yeah.
But that's also interesting because there's been a lot of talk of we're moving into an environment where some of these beverage and food makers aren't going to be relying on pricing as much as they're going to be relying on volume growth. But at least for Coke, it seems like those higher prices and pricing power is still the way to go.
I think it is super interesting to see what people are paying for, because Spotify is absolutely soaring this morning as well, and it's because paid subscribers grew. Same goes for Netflix. There's a lot of divergence here in what people are paying for content.
Yep.
But then you see those UPS numbers, UPS just tanking. Yes, part of that is costs here, but also this has to do with their average daily packages falling below analyst estimates. So is there a slowdown there that signals something else?
Yeah.
You know what? I will be glass half empty for you while yours is full. And that.
Look at, well, speaking of half empty, look, you saw UPS there down, actually getting decimated, right?
Yeah.
Polaris even worse, and they make razors and side-by-side vehicles as well as marine equipment.
Their comparables also sinking today, like Mastercraft, the boat maker.
Yeah, so look for those companies where consumers need to reach in their pocket and spend a little bit of extra disposable income because discretionary is getting hit very hard. Coming up, Mark Lehman joins us, Citizens JMP CEO, why he says the great rotation
There we go.
is alive and well. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Let's get now to high interest, look at what's making headlines around the world. First off, the U.S. Department of Transportation has opened an investigation into Delta over Friday's outage, which has continued to disrupt flights this week. Transportation Secretary Pete Buttigieg posted on X that his department is working to ensure the airline is following the law and taking care of its passengers during continued widespread disruptions. Porsche shares fell the most on record after the luxury car maker cut its outlook for the full year. The German manufacturer said a shortage of aluminum parts could cause it to stop production of some models. Porsche is also struggling with weak demand in China. CrowdStrike CEO George Kurtz is being called to testify before Congress following a defective software update that caused widespread global outages. The company has been asked to promptly schedule a date after the disruption that hit healthcare, airlines, including Delta, ports, companies, and governments. Janali?
And Tesla and Alphabet, two of the Magnificent Seven, are set to report today after a painful tech-led sell-off last week. Joining us now is Mark Lehman, head of Citizens JMP Securities. And you think about the weight of the Magnificent Seven here and how important they've been to this market. Do you think moving forward, any disruption here you see in this earnings cycle will set that off course?
It's a great question. We're going to find out soon. We saw a little bit of that disruption just with the rotation the last couple weeks, but I don't think it's going to be an earnings problem. It's going to be a multiple problem. So as earnings continue to do well, I think the stocks will continue to do well. But I do like this expansion from the Magnificent Seven to a magnificent stock market. It's better for everybody.
Let's talk about that a little bit, because we were just speaking with Dana DiOrio in our previous segment, and she made the point that you take a look at small caps, which has been, of course, the beneficiary of this rotation. 40% of small caps are unprofitable, and then you have the fact that the IPO market is really muted, and you're not seeing those, valuable private companies come into the public markets, and that makes the stories on small caps maybe a little bit less rosy. How are you thinking about that?
Well, the smaller companies that have decided to go public have done quite well. We were at Citizens part of Reddit, as you know, earlier in the year, and there was a lot of question marks about valuation, a lot of question marks about earnings and about their ability to monetize. And they have just absolutely done a phenomenal job with both projecting what they're going to do about monetization as well as reporting those numbers. In fact, our analyst, Andrew Boone, has raised his numbers continually since they've gone public. So the question is not, are all small caps in a problem territory? The question is, who's going to make the decision to go public? I'll point to last night. We're talking about Google. Wiz was this very highly valuable private company in Israel, and they decided to not be bought by Google and pronounced they want to go public. Well, that was music to my ears and a lot of people, because I think showing that as an avenue to go monetize for your employees as well as the company, I think is a wonderful statement.
Yeah, there is some skepticism that they will go public, but definitely one to watch. But to your point on the IPO market, something that we were discussing is, if you continue to see this broadening out, would that encourage more of those smaller companies that you've been speaking of to actually test the waters here?
I think so. I mean, I've been on the street for a fair amount of years. I talk to portfolio managers every day. I have not seen a demand imbalance like we've seen. There's more demand than supply. And I think when I talk to portfolio managers each day, they're like, show me some companies because we are interested, because we are looking to broaden out our portfolios. That usually is the opposite what you hear, which is like enough. So I think as long as companies, somebody's going to test the market. Somebody's going to be brave enough, if you will, to see if there's that demand. And somebody on our side of the street is going to say, you don't have to float $500 million worth of equity. You don't have to be a $10 billion company. There is demand, and I think that's true.
But let's not give up on this Wiz point, because I think the skepticism comes partly from this desk here.
That would be me.
Why though? I mean, it was a $12 billion company in May, right? Google basically doubled their offer, and they said no, which I get, because you know what? Instagram got sold for $1 billion. It's worth a heck of a lot more right now. How much was YouTube? Probably less, or no, I think it was about $2 billion. Right. But it's worth a heck of a lot more right now. Why do you think there would be a problem with demand for a $23 million IPO?
This IPO market has not been as hot as anybody expected. And also, these large companies, your point on the multiples here, can they make it out of the gate?
I think the question really is, and remember, they're only going to float 5 to 10% of the company. And there's probably going to be very little that's sold by insiders as well as employees. So the question is, as a public company, are you going to grow into that valuation? If you're doubling revenues, like Wiz has done, the $24 billion number in 18 months is going to look not great. So I think we're seeing that. Look at what happened with Reddit. I don't want to keep pointing at just one example, but that stock has doubled from, they priced outside of the range, above the range last time. The stock's already doubled. I think more people will see that and say, if we are confident in the numbers, our stock is also going to do very well.
Also, I get, being skeptical on it this quarter, but 18 months is like 50 years from now, right? Everything could change in 18 months. By the way, speaking of that, let me ask you about a Trump presidency, because, we're talking about rate cuts right now. If he really goes through with higher tariffs, more tax cuts, deporting 15 million workers and closing the border, you're going to see rate increases more likely than rate cuts.
I think you're right, Matt, but I also think this is this is election season. So in the next 120 days, we're going to hear a lot of that rhetoric. I think you get in front of Congress in January 20th and you start to talk about reality, and we're not going to want to deport 15 million people. We're going to want to make sure that we have an economy that's humming along, which it's doing right now. So rates coming down, productivity going up. We haven't even 10 minutes and we're not even talked about AI, which is obviously really important. That productivity is multiple enhancing, and I think we're going to see that over the next 5-10 years.
Well, Mark, I'm sad to say we have to leave it there. Have to have you back soon to talk about AI and some of the other buzzwords. That, of course, is Mark Lehman of Citizens JMP. Now, coming up, we're going to take a look at the companies making the most social buzz today in our Social Climber segment. Up next, this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Time now for Social Climbers, the companies making waves this morning. And first up, Comcast missed revenue estimates in its second quarter as it dealt with a sluggish season at its movie studios and theme parks. Park sales slumped 11%, while revenue in the film unit tumbled 27%. Next up, Philip Morris, which owns brands such as Marlboro, it raised its forecast for annual profit growth. The tobacco company seeing higher demand for its Zyn nicotine pouches as desire for tobacco alternatives lights up consumers' enthusiasm. And finally, Coca-Cola raising its full-year outlook as higher prices bolster the soft drink giant's performance. The company is also getting a boost from new product launches and big sponsorships such as the Olympics. Now, Coca-Cola's main rival, Pepsi, reported weak revenue growth earlier this month. You can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Now, coming up, Tracy McMillan. She is Wells Fargo Investment Institute head of global asset allocation strategy. Why she doesn't think the rotation is the start of a new trend. This is Bloomberg.
Arch has laid plenty of groundwork for future revenue. But for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors, including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
We are moments away from the start of trading on a very busy day for earnings. This is Bloomberg Open Interest. I'm Matt Miller. Take a look at futures. They are down across the board right now. You're about to hear the bells ringing on the New York Stock Exchange and down at the NASDAQ. On the NYSE, we have Ameris Bancorp ringing the bell, and over at the NASDAQ, we have Iron ringing the bell, IREN there. Cool hats. Let's see if that does anything to move the markets. After a slew of earnings came down, we still have red arrows across the board. Let's get over to Katie Greifeld right now and see where the major averages are opening up. Katie?
Yeah, you take a look at the big benchmarks right now. A little bit of a breather after what we saw yesterday, that big Monday rally. Currently, the S&P 500, I'm going to go ahead and call that unchanged. The NASDAQ 100, meanwhile, taking a little bit of a dip lower. The NASDAQ 100, your big tech names down about 0.2%. Meanwhile, your small caps, that rotation faltering today. The Russell 2000 off by about 0.5%, but it's early still. But one stock we're keeping an eye on at the opening bell, of course, is UPS, reporting profit that fell short of analyst estimates, with the delivery company really facing pressure from wage inflation and soft demand. You add it together, shares currently down about 10%, Shanali.
Katie, I'm back to glass half full. I'm keeping an eye here on Spotify surging. After reporting subscriber growth that beat expectations, it also boosted profitability through those price increases and cost cutting. Spotify up almost 14% at the open.
And General Electric surging after reporting a jump in second quarter profit and raising its guidance for the full year. Let's get a closer look at Bloomberg's Abigail Doolittle. Abby?
Yeah, investors really liking this one, Matt. The stock up about 3.2%. And as you mentioned, they did beat profits, the estimates for the last quarter by 22%, putting up $1.20 in adjusted earnings. It was a mixed quarter, though. Revenues fell short by almost 3%. That was $8.2 billion. But investors doing what investors love to do, looking forward. They love the fact that the guidance for profits boosted on the full year. And this has everything to do with GE Aerospace, in particular their maintenance services. In addition, on the quarter that was, orders and free cash flow also growing by double digits. Now, into today, this stock up about 60% on the year, which is really pretty incredible. Let's put this into the context of the overall industrials complex. Industrials on the year into today up just 11%. You can see tech, communications, those are the top sectors, real estate, materials, the worst. All 11 sectors up right now. Industrials almost right there in the middle. GE, one of the stocks in that industrial complex, Matt, that's right at the top of the pack.
All right, awesome. Abigail, thank you very much for that. Abigail Doolittle, they're looking at GE for us. Joining us to talk about stocks and earnings, Tracy McMillian, head of global asset allocation strategy at the Wells Fargo Investment Institute. Industrials, one of the sectors that you favor, Tracy. What do you think out of the gate here?
Speaking of industrials, we think that there's going to be a broadening out of earnings away from just information technology and communication services like we've seen so far this year to sectors like industrials and materials and energy, areas of the market that have been somewhat ignored so far this year. And so we think that some of the earnings out so far are very encouraging for that favorable rating.
Is that enough, though, to really keep the momentum behind this recent rotation that we've seen? You think about the small caps, by and large, just really taking the leadership baton over the past 2 weeks. That's paused a little bit, but that broadening out of earnings, could that revive it?
So we think that in terms of small cap companies, it's probably too early to be investing significantly in small caps. Small caps are responding to the potential for lower rates, and the surge that we saw in small cap prices really came at the same time that we saw that lower CPI print. So lower inflation means lower input costs, lower interest rates. Both of those are good for small caps, but we see signs that we're more late cycle, extended late cycle than early cycle. Small caps really start get a more sustainable rally at the beginning of a cycle, not late cycle. So we think it's probably too early.
Tracy, you think about the divergence that you're seeing in the stock market right now and some serious pain trades going on. When you look at UPS alone, it's dropping the most since October of 2008. If you think about any places that are cost pressures are still a problem, where consumers are getting weaker, where are you the most concerned?
Yeah, we're most concerned with staples, in fact, because we think that as consumers do pull back and the lower quintiles of the consumers are struggling as they pull back, that's going to result in less revenue for staples companies, and we think that margin pressures are going to continue in that space. We do think, though, that there are opportunities in financials and in healthcare. So a couple other sectors that we like away from some of those consumer sectors.
Yeah, I look at the consumer, and we've been worried for weeks or months now, Tracy, that people aren't, putting in pools anymore, that they're not buying Winnebagos. Today we see that, Polaris is having trouble selling off-road and marine equipment to those who need them. On the other hand, General Motors has sold over 100,000, Silverado pickup trucks, and those are just the light duty. They raised their full-year forecast to as much as $15 billion in profit. So what's going on that the consumer can still buy cars right now?
Yeah, I saw that this morning. We're definitely getting some mixed signals there. I think what is happening is that the upper end of the consumer spectrum does still have the means to go out and purchase automobiles, to purchase those higher end products, especially if they're cash buyers, if they're not confronted with these higher interest rates. But they too seem to be paring back on non-essentials. You could say that an automobile is an essential, maybe an ATV is not.
It's a good point, too. But even still, it feels like you can't really paint with a broad brushstroke here. We were talking about the difference between Coke and Pepsi. And of course, like Matt pointed out, they do have a slightly different product mix there. But still, you think about sort of this black and white earnings picture. What level of nuance do you need to have as you're reading through these earnings reports and trying to just prepare for what's to come?
That's a really good point. Yes, it does seem to be somewhat idiosyncratic, and different companies are executing more efficiently in this market. So, what we're really looking at are those higher quality companies that have cash on their balance sheets. They're not borrowing. They do have growing earnings, and during this earnings season, we're going to be watching both the past, so the earnings reports for this quarter, but more importantly, what they're saying about the coming quarters.
Tracy, how badly does this market need a rate cut? If you see signs of cooling, the market expects September. If we don't see September, what happens?
Well, I think markets are going to be very disappointed. There's almost 100% probability right now priced into the markets that there will be a September cut. So if we do not get that cut, we think markets will definitely be disappointed. But you also have to think about, why would we not get that cut? We might not get it if growth continues to be strong. If the labor market starts to surprise again to the downside, the downside in terms of fewer claims, the upside in terms of more people being hired. So if we see any of that transpire, that could neutralize some of the negativity from another postponement of a rate cut.
Tracy, we thank you so very much for your time. That is Tracy McMillian of the Wells Fargo Investment Institute. And coming up, Tesla out with their earnings today after the bell. We're going to preview what to expect next. Stick with us. This is Bloomberg.
I was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, you know, any given day it would be the head of a studio and, you know, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. You take a quick check on stocks right now. We're pretty much flat on the session. The S&P 500 not doing too much, of course, after yesterday's action, higher by about 0.1%. Let's get to our top calls, though. Some of the analyst action in focus this morning. And first up, Morgan Stanley raising Snap to equal weight. The analyst cites improving ad performance and says the stock's valuation versus its peers is more reasonable than it was earlier. Next up, we have Morgan Stanley cutting Under Armour to underweight. The firm says that internal survey results came in as neutral to negative and that Under Armour trailed most of its major sportswear peers in nearly every brand perception category. And finally, we have HSBC upgrading Krispy Kreme to a buy, saying that the sale of the company's majority stake in Insomnia Cookies helps it deleverage faster. Now, HSBC had expected a complete stake sale, but says that Krispy Kreme selling its majority stake and remaining a minority shareholder is, quote, still helpful, Matt.
Are you, do you eat Insomnia cookies?
Not a huge fan. I do love a Krispy Kreme, though.
Krispy Kreme is delicious.
Absolutely.
One stock to watch is Tesla, trading higher ahead of its earnings report due after the bell. Joining us now to talk about it is Ed Ludlow, co-host of Bloomberg Technology. He follows this company extremely closely and has been reporting on it for years. Ed, what do we expect from Tesla?
I think ultimately it just comes down to the forward-looking stuff. You know, for Wall Street, there's a lot of anxiety about the future of autonomous driving. And so in the first instance, we want a date for robotaxi. You'll remember that it had been scheduled for August 8th. Dana and I reported that it had been delayed until October, partly because Elon Musk had requested a design change for robotaxi, and partly because they wanted more time to have stuff to show for it. And 3 days after we reported that, Elon Musk posted on X, kind of indirectly confirming that he had made a design change request, and that more time meant they'd have more to show. So I think that's, in the first instance, what we're looking at. And then the question is, like, how did they do?
You know, it's interesting. While Tesla is a super interesting story right now, too, I also want to get your opinion here, Ed, on Alphabet, given that falling apart of the Wiz deal. How much did they need that to begin with?
Yeah, it's interesting. I mean, that's kind of two deals now where Alphabet's looked at M&A as an option and it's not really gone right for them. In the context of earnings, you know, just as with Amazon, I think you may have seen SAP out of Europe. It's all about cloud growth and tangibly how much cloud growth is being driven by AI or generative AI. So, you know, the Wiz deal was kind of seen as a value add, and I'm sure that Ruth Porat will get questions about it on the media call that she does, and that Sundar Pichai will get questions about it on the analyst call. But then everyone will look past that and go, okay, what's the cloud story along with the bread and butter search and advertising business?
And it was interesting. You saw a Dan Ives note come out from Wedbush, of course, and his take was that potentially this opens the door for Microsoft to make a cyber M&A play, sort of in optimistic shade to what's going on right now. But you think about all these antitrust concerns out there, this aggressive FTC. I mean, what does the M&A landscape in big tech look like right now? Would this even be possible?
As sure as the sun rises and sets, Dan Ives has put out a note on it. And I think that the idea was that after CrowdStrike, where Microsoft is basically the #1 player on endpoint security, CrowdStrike's #2, and they're closely linked, of course, that there was an opportunity for someone to make some market share due to CrowdStrike's misfortune, put it that way. Interesting in our reporting, citing sources that, you know, the Wiz leadership and founders basically say, you know, we don't think that Alphabet can get this done. And I already look ahead to November in the presidential election, right? It's really worth reiterating that J.D. Vance is very firm and clear on the policy that he thinks big tech is too big, it should be broken up, and that antitrust will be an ongoing theme. If there's any common ground between the Trump ticket and the Biden administration as it currently stands going to Kamala Harris, it's that the FTC has done the right thing and they should be continued to empowered to do so. And so that's a psychological thing in any market.
I would ask for a $1 billion breakup fee. And what about the IPO market? What's the vibe right now on the West Coast? Because clearly you haven't seen a lot of them getting done, and there doesn't seem to be that much appetite, although we just talked with Mark Lehman from JMP, and he said there's demand out there.
Well, I mean, one of the rationales for Wiz walking away from the offer from Alphabet was because they would rather do an IPO, and that's in part informed by a commitment from the management of that company to its staff, right? Many companies go public because they have long-serving staff with stock comp that they can only really get a benefit from if they list. One other example is Turo, that the CEO, Andre Haddad, was on the show with me very recently. He basically said, it's kind of not great still out there. The conditions aren't brilliant, and the election is a big factor going into November. So it's still, for many, a wait-and-see kind of mode. But the private markets give. They are willing to hand over cash. And so why go public and the process of that and sort of the requirements of that if private investors continue to back you at that growth stage? I think that's really interesting.
That's what I've been saying, Ed.
Of course you have. I got it from you.
Our thanks to Bloomberg's Ed Ludlow. Don't forget, you can follow Tesla results and our live blog today by typing TLIV GO on your Bloomberg terminal. Of course, a lot of eyeballs on that aftermarket. Now, coming up, JP Morgan's new investment banking heads are chasing market share. We're going to discuss that and more in our Wall Street Beat. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg Open Interest. We take a quick check on the stock market. 20 minutes into the trading day, you can see the S&P 500 up about 0.2%. The NASDAQ 100 actually not leading right now. It had been, but currently, up only 0.1% or so. Meanwhile, the small caps, they were down and they're still down, but taking back some of those losses. The Russell 2000, your small caps, currently down by just 0.1%, Shanali.
And Katie, it's time now for the Wall Street Beat, the most talked about stories in finance. First up, JP Morgan's new investment banking co-heads are looking to handle even more corporate cash flows, a mundane service that can open the door to lending and trading. In their first joint interview with Bloomberg News, the co-heads said they are also forging ahead in private and deploying artificial intelligence. Now, you have to remember, we're talking about Jennifer Pipsack here and Troy Rohrbaugh. Both of these people, guys, are seen as very significant successors to Jamie Dimon. They clocked a record amount of revenue in their division, a division that they bought together in a bid to compete more with Citigroup, actually. Remember, the division is already about 2 times the size of Goldman's headcount, just that division of JP Morgan alone.
Yeah, it's an interesting move here. Remember, this was one of, the biggest shakeups in quite a while. A real question, though. Jamie Dimon is 68. Is he going anywhere? We talk about succession all the time, but it seems like
Wait, because you think 68 is so young?
No, yeah, I kind of do.
Well, the interesting thing is he's stopped saying that 5 more years thing that he's always been saying. And it's interesting because with this investment banking division, you have to remember, now it's giving them a chance not just to work with big companies around the world. They're doubling down on India and elsewhere, but also middle market companies. They are even expanding across America more than they are. Anyways, coming up next up, the IPO market is in focus. Wiz rejecting Alphabet's takeover bid. We've been talking about it. The cybersecurity startup will instead stick to its IPO plans. And talking more about investment banking here for a minute, because if you guys have seen that this is actually going to be one of the largest moments in IPOs since we saw last September when ARM finally lifted the gates.
You mean if they actually do it?
Yeah.
You're skeptical that they will. I think it's important to remember that if you turn down a huge offer like this, and it is double what they were valued at just in May this year, and say that we're going to IPO, that doesn't mean you're going to IPO this month or next month. It doesn't even mean that you're going to IPO this year or next year. It could be much further down the line because they have ways to get cash for long enough that they don't need to IPO in 24 or 25. And obviously the markets can change dramatically in that period of time.
And that's true of so many private companies right now that would be very good IPO candidates that would probably be very well received, but they don't really need to go public. I mean, what is the benefit other than being
You know what? We are going to have a CEO on in the next hour, and I'm pretty sure that they intend to IPO within the next year or two.
What is her name?
So we can ask her, Natalie Gordon.
There we go.
We can talk to her about it, but also remember we have Lineage looking to go public. That is a nearly $4 billion IPO. We'll talk to those founders later this week as well. Let's see how it does because it could lift the gates. StubHub, remember they were planning an IPO. They're now waiting until later this summer. Klarna, we've been waiting for it for a long time. They finally are looking at those banks, according to the Financial Times. But again, there is friction getting out the door.
Yeah, absolutely. And waiting just seems to be the name of the game. It doesn't seem like they're beating on the walls of that pipeline.
Want to also end here on UPS, guys, because we have to take a look at that stock. Of course, very big cyclical stock that we're looking at here with a more than 11% drop. That is still the worst since we've seen in October 2008. And of course, this market has otherwise been a very strong market, but you never like to see those comparisons back to 2008. Of course, UPS...
Especially for a company like this, which is such a huge bellwether for the economy, right? It's not like Polaris, where if they're not selling a lot of razors, side-by-side vehicles, doesn't matter because you don't need those, right? UPS is shipping the stuff that we need for commerce. Like, that shows you how the economy is running. And if they are having a problem, the economy is having a problem.
This isn't apples and apples at all, but I think about just how punishing the earnings misses have been. You think about UPS, you think about Nike a couple weeks ago, and then you think about CrowdStrike, which an outage brought down, the global financial system, and shares were punished, but not as mightily as we're seeing in UPS right now. It's just really an interesting way that investors are prioritizing. Right?
By the way, Google, to go back to the Wiz story, right? They're offering $23 billion. CrowdStrike was selling for that in 2022. So it could get to a point where they could pick that up instead of Wiz.
You know, that's a very fascinating point. And the one thing we did ask Microsoft, for example, is how are they going to continue on their relationship with CrowdStrike after what happened? You've been reporting they might be testifying in front of Congress soon. And remember, UPS was actually one of the companies affected by CrowdStrike, but it was after the quarter. So we actually still don't really know the financial impact.
It's all tied together.
It's all tied together.
Shanae, let's take a look at the trading diary, the events you need to be watching today and this week. First off, obviously, we're going to get big tech earnings. Tesla and Alphabet, the owner of Google, reporting after the bell. We'll be paying very close attention. Definitely tune in to the close for that. Tomorrow, Israeli Prime Minister Benjamin Netanyahu addresses Congress. He was going to meet with President Biden today, but now he's not going to meet with President Biden today. Maybe later on in the week. Thursday, we're going to get U.S. GDP and durable goods numbers, so watch EcoGo for that. And especially on Friday, we get the inflation data. We're going to get PCE. This is Bloomberg.
owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of I guess the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me. And I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so check us over there on YouTube. Alex Steele, Paul Sweeney. We are here, Bloomberg Intelligence. During the last 3 hours of surveillance, we spent a lot of time on politics. We'll keep our eye on that here for the next couple hours. We're going to lean in heavily on earnings. Big meat of the earnings hitting this week. So we've got a lot of the BI analysts, George Ferguson on Boeing, GE, and some of the airlines, Geetha Raghunathan on some of the big media companies, Spotify and Comcast out numbers. Mandeep Singh, he covers the technology companies for Bloomberg Intelligence. We'll get his thoughts on some of these tech companies reporting earnings. Tesla after the close, Google after the close. We'll get some preview there. We're going to talk to Lee Klaskow from Bloomberg Intelligence on UPS. Not so bueno there. But let's kick everything off with Mr. John Tumber.
Hi, Paul and Alex. We're being brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of over 1 billion global fixed income securities with no markups or built-in spreads and low transparent commissions. Learn more at ibkr.com/bonds. We are data dependent, so let's start with the data. Existing home sale. I like to call them used home sales coming in much lower than expected on a month-over-month basis, down 5.4%. That works out to an annualized rate of 3.89 million. Compare that with the previous reporting period of 4.11 million, so slow down there. Also, on the data front, we're going to get the Fed's preferred inflation gauge. That comes out Friday. Earnings, and that's where the focus is right now. 16% of the companies in the S&P 500, they've opened the books so far. Most have beaten earnings per share expectations. Companies representing about 29% of the S&P 500 market value set to report this week. And, of course, Tesla and Alphabet, the first of the so-called Mag 7 tech stocks to post earnings this quarter. get that after the close of regular trading. Meantime, Brian Levitt at Invesco says the #1 issue for investors is, yes, the economy.
The focus was on the Fed cutting rates. Now the focus is back towards growth slowing. We'll get to the point where the focus is again on the Fed. We've priced in the couple of rate cuts now, and things will broaden out. But in the near term, it's more of a defensive environment as the economy slows.
And right now, the S&P 500 is up 8 points, up about 0.1%, 55.72 on the index. The Dow Jones Industrial Average up 27 points. That's a rise of about 0.1%. And the NASDAQ 100 lower, down 23 points, 0.1% lower. And shares of General Motors, they are down over 6%. Their earnings today, they also said they're going to push back the planned opening of an electric pickup truck plant in suburban Detroit. That was actually the big news out of that earnings report. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul, and hi, Alex.
Hi, good morning.
Good
Happy
morning.
Tuesday, happy rainy Tuesday here in New York. I'm Alex Dio alongside John Tucker and Paul Sweeney. I do you one better. It's $5.9 trillion at market cap reporting today. Third busiest day in earnings season
you with
this
a little
quarter.
fun fact there.
This wasn't mine. This was Dan Curtis. Shout out to him over in London. So let's get some of the details on some of the movers. Deeper dive here. Bailey Lipschultz is joining us from Bloomberg News. So UPS was confusing to me because the fact that it's getting hit so hard when we knew that the wages were going to get hit hard this quarter, so their costs were going to get squeezed. And I'm just confused as to the reaction here.
It's worse than expected, and that's what analysts are saying. So Evercore came out saying the magnitude of the 2Q miss and that downward revision for full year guidance will surprise even the biggest bears. So you're seeing the stock down 12% right now. Worst intraday drop since 2008, but I'll uncheck the intraday basis. If it closes down 12%, worst day on record for the company. So that is a huge move for a company, especially because we've been seeing, and I know, Paul, you like to look at what people are buying. E-commerce spending has been strong. So this isn't an e-commerce, this isn't consumer pulling back. It seems like this is really a UPS issue that they have to get right.
Looking at this, 14 buys, 16 holds, and 2 sells on Wall Street for this name. So the street's completely flummoxed here with what to do with UPS. And we'll have Lee Klasko. He covers all the logistics companies for Bloomberg Intelligence around 11:26 this morning. So yeah, a tough day there for UPS. What else you got?
Yeah, GM, as JT mentioned, down more than 6% right now. It's interesting because pre-market, they announced they raised their full-year adjusted EPS guidance above what Wall Street was looking for. The stock was up more than 7% at one point, but did a complete 180 after Mary Barra announced on a call that they're going to delay the opening of the electric pickup plant outside of Detroit again, and also postpone their Buick EV. I know we're going to get Tesla earnings post-market, but it seems like those issues for these car makers related
Is it
to
demand? Are they delaying these plants because of demand? Because that would really be a problem.
They haven't really laid that out. When I look at kind of our coverage of it, second delay, initially was supposed to open in late 2024. So you are seeing some demand issues playing out, but they're saying that that's part of the reason they're not going to be able to meet their goal of having 1 million EVs by the end of next year. So they're going to add production because they do see, according to David Welch's story, they are seeing an interest in EVs, but I feel like if you go to a car dealership, EV deals relative to where they were at a few years ago, it's way cheaper.
Their biggest selling vehicle? The pickups, the Silverado LD, 100,000, over 100,000 units. The Silverado HD, 45,000 units. It's just like pickup trucks.
And
the way
same
to go.
thing for Ford. The Ford F-150 is just the most. Now the good news is at 11:42 this morning we're going to talk to Kevin Tynan, formerly led our autos research at Bloomberg Intelligence. He's now at a new shop, director of research at the Presidio Group. So he's going to join us. He'll break it down.
What's also so interesting about the GM news is that if they sell all the pickup trucks, that's where they make all their profit. They don't make a profit on EVs. So in theory, like delaying a plant should be good for the
Here's
bottom
another
line.
fun
So
fact.
that's a little
If
confusing.
you could break this down for GM, I just discovered this. GM Equity, MODL, and it has all the fun facts and figures. The worst selling, they sold 71 Buick Encores. 71.
Okay, cars. We like cars. We like the cars. Okay, what else? Bailey, you got one more, right?
Yeah, looking at paint stock, Sherwin-Williams up 3.7%. This comes after earnings beat expectations, though sales fell short. Looking at some of the analyst reactions, it's going to be interesting to see how Sherwin-Williams and some of these paint producers and suppliers can navigate kind of what lies ahead. We do see, in terms of potential home sales resuming, people wanting to buy homes, especially if interest rates fall down. But if consumers are feeling a bit of a pinch on the ability to redo or remodel their homes, that does end up hitting these companies. So you are seeing Sherwin-Williams up again today, up more than 3.5%. That's the best jump since November 2023. But the path forward seems mostly optimistic from analysts, but still kind of a bit of caution given the state of the consumer.
All right. Bailey, thanks a lot. We really appreciate it. Always good to have you on. Bailey Lipschultz is joining us from Bloomberg. Let's do some more digging into the big news of the day as well as earnings. And for that, we go to George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. So there's a Farnborough Air Show happening in the UK, and also we had GE earnings. We also had Larry Culp talking to Guy Johnson over at the Air Show as well. Airbus had to turn some people away, to turn some orders away because they couldn't fulfill them, and the backlog is so long. And George joins us now on the phone. Hey, George, what's been some of your takeaways over the last 48 hours?
So thanks for having me on. So the takeaway is, I would say, a much more subdued show than we've seen in years past. I see a bit more of a defense angle at the show. I think, given the war in Ukraine, I think the Europeans are thinking more about their defensive posture and how to improve it. And I think, frankly, I think globally you're seeing just sort of a higher interest in defense spend, and so you're seeing a lot more of the defense products at the show, and we're not seeing a lot of orders. We didn't think commercial orders. We didn't think we'd see a lot of commercial orders. I hear you about Airbus turning away orders. I have a hard time imagining that. I think they'd want to put them in the backlog, so it tells me maybe people not agreeing on prices and things like that. But I think commercial is going to be a smaller portion of this show than it's been in years past.
What are we hearing from Boeing, George? I know you'd mentioned earlier that you thought this show would be a time when they need to just hold hands of their customers. What are we hearing from Boeing?
Yeah, so I was over at their display a little bit earlier today, and there's a lot of presentations there about quality, not surprising. And then on the other side of that display, there's a lot of discussion about their defense products. And so I think they're going with the times here, too. They've got a pretty, I think, strong lineup of defense products. So they're trying to, again, tout sort of the improved quality as well as their capabilities in defense.
What did you make of GE and their earnings in addition to what you're hearing about them from the show?
Yeah, so, GE, what I saw, there were some really nice margins in the engine business, improving margins as well in the defense business, which were nice. But the engine business has really got a tailwind right now because they're not shipping many new engines because of Boeing's problems, right? So the GE is the primary engine on the 737, not been a lot of deliveries of 737 because of Boeing's woes. And that really gave them a nice tailwind push to margins and profitability. You may have noticed they raised profitability for the year, their expectations for the year, and lowered the revenue outlook a bit. And again, that's just a function of, look, less new engines are going to get delivered, and those new engines typically come at a small loss. So I think the numbers look good, but they're not going to be repeatable in the future, I think, because the mix won't be this heavily slanted to spares, I think, in the future.
All right, George, thanks so much for joining us. Go get yourself a pint of warm beer over there at the Farnborough Air Show. George Ferguson covers all the aerospace and all the airlines and anything that kind of flies through the air. That's George Ferguson's remit for Bloomberg Intelligence. Let's switch gears and let's get right to the media space. So we have some media companies reporting. We're also going to have Google reporting after the close tonight. Geetha Ranganathan joins us. She is the media analyst for Bloomberg Intelligence. Geetha, I know we had Comcast today, and that stock's trading down, but let's go with a winner, a good story. Spotify. Now, I'm not a Spotify customer per se. I'm going to venture that John Tucker neither is probably not a Spotify.
No, because he has his cassette tapes.
He has his cassette tapes. Very good.
No, I just refuse to pay for it when I can get it free.
You know you have cassette tapes.
Okay.
Do you?
Yes.
Yeah.
Very good.
I have 8-track tapes.
I have 8-track tapes.
And this is why we love you.
That's exactly. Geetha, talk to us about Spotify. Stock's really rallying today.
Yeah, thank you so much, Paul and Alex. So Spotify really blew it out of the park. You're absolutely right. They're up, I think, now 13, 14%. And really the number here for Spotify and the main story has not just been great subscriber growth. So they've been adding a solid 5, 6, 7 million premium subscribers every quarter. But for them, what it really has been over the past few quarters has been this inflection in profitability. Remember, what we're now looking for streamers across the board, and this goes to Netflix and everybody else in video streaming, as well as Spotify, which is the main audio streamer with a 35% market share. The narrative has really shifted now to profitability, and they absolutely blew it out of the park. So the gross margin guidance that they had given was 28%. They came in at 29%, but even better was the outlook. So for the longest time, Spotify was stuck at like a 25% gross margin. They were pointing to like longer term margins of 30%, but looks like they're going to be able to hit it right in the third quarter. And that's why we see the stock reacting the way that it is.
So did it take anyone else's lunch, or this was just a really good sort of management cost issue?
Yeah, it's excellent management. More importantly, it's also price increases. They've done, they hadn't taken any price increase, Alex, for more than 10 years. And then in a span of two years, they've raised prices by 20%. And that's just because they know that people love Spotify. Nobody's going to churn from Spotify to, let's say, Apple Music or YouTube Music. They have a 36, 37% share of the global audio market. And they're just adding so many features and so many new verticals that they're able to take those price increases. But of course, apart from that, it's also been a very good story when it comes to cost cuts. So they were investing heavily in their podcasting business, like with the Joe Rogan show and adding all these other exclusive podcasts. They're being much more prudent now on that front. And those cost cuts, again, have really driven profitability.
How much of their revenue is subscription versus advertising versus other these days?
Almost all of their revenue, Paul, is subscription.
Ooh,
so it's
nice.
it's a very, very heavy subscription-based business. They are trying to build the advertising business, but as you know, again, that takes time. That will drive the longer-term margin story, but as of right now, the mix shift is really subscriptions.
That's pretty impressive. Hey, can I ask you about Comcast and what you made of their earnings that came out earlier, reported second quarter revenue that missed analyst estimates? It was the movie season, you got theme parks, the whole thing.
Yeah, so Comcast is an interesting story. So Comcast is actually, your typical media conglomerate. They own both video distribution, broadband connectivity, as well as the media side of the business with NBC. 80% of their EBITDA actually is related to just broadband subscriptions. And so what happened this quarter, we were expecting a little bit of softness in broadband. And as expected, yes, they did lose subscribers. Remember, the whole cable industry is really in a slump because of very, very intense competition from some of the telecom offerings, both with fiber and fixed wireless access. So we're kind of seeing that slump, and it looks like Comcast is really not going to be able to get out of that slump. More interestingly, however, for both Comcast as well as Disney, is that the theme park attendance is actually flailing. And a 24% decline in their theme park EBITDA. And that's really because huge pull forward, or what they're saying was a huge pull forward post-COVID, and now we're kind of seeing normalization. So that was a little bit of a disappointment. But I think overall the business is fine, but we are going to see some extended softness over the next few quarters.
And, the stock is down about almost 6% today, down 15% year to date. When you look at Comcast, great collection of assets, but none of which are really, they're all facing serious headwinds. What's the feeling among analysts and investors you talk to? Like, what can a Comcast actually do to become, an attractive stock?
So Comcast, of course, Paul, as you well know, has always kind of been saddled by this conglomerate discount. The big question, and we know Brian Roberts has always been hungry for some kind of deals. So the wild card, they're obviously a wild card when it comes to M&A. I guess once, if the administration changes and if it's more favorable for deals, I think Comcast will be a major player. We don't know whether they'll look to do some kind of joint venture with, Warner Brothers or Fox. It remains to be seen, but of course, they will be a major player in the space. Again, in terms of what would move their stock, maybe if they spin off their NBC business. Brian Roberts has not indicated any such thing, But I think over the near term, what really needs to happen to kind of move the sentiment on the stock is they have to show positive broadband subscriber growth.
All right, Geetha, great stuff, great analysis as always. Geetha Raghunathan, she covers all the media business for Bloomberg Intelligence. She's down in our Princeton office, and you kind of look at those two stocks, Spotify, kind of the new media, if you will, Comcast, kind of the old media, if you will. When there's a time when I was covering Comcast, it was the new media versus some of the traditional media, like newspapers, magazines, that kind of thing. But it's just this evolution and what technology has wrought to the entertainment and communications businesses. A lot of these traditional media companies have a really hard time kind of evolving.
Yeah, and then how do you break it up when like one area is your revenue stream, but the other area is your growth? Like, I'm glad I'm not in their shoes. All right, coming up, we're going to talk to Henrietta Treyes, Managing Partner and Director of Economic Policy at Veda Partners. She will discuss the latest in the U.S. presidential race. Apparently, Kamala Harris has enough delegates to get her on top of the ballot. We'll break it all down for you. This is Bloomberg Intelligence.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages modestly higher ahead of the tech earnings that we're going to get today after the close of regular trading. In the S&P 500, you have 8 of the 11 major industry groups. They are higher right now, and that's being led by consumer discretionary. That's where you're going to find shares of Amazon. The price target there was raised by analysts at Morgan Stanley. MSCI, the best performing stock in the S&P 500. This is the company that comes up, they devise indexes for the money managers, the benchmarks. Right now, that is up 11%. They beat estimates in their earnings report. Worst performing stock, again, that belongs to United Parcel Service after its earnings report. Those shares right now down over 12%. S&P 500 up 18 points. That's a rise of 0.3%, 5581 on the index. The Dow Jones Industrial Average up 43 points. The NASDAQ 100 right now up 41 points, and that is a rise of 0.2%. Two-year yield about 3 basis points lower. That is at 4.48. The 10-year at 4.22. That also down about 3 basis points. And quick look at crude oil. NYMEX crude down 1.5%, 77.17 a barrel. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
Thanks so much, John Tucker. I'm Alex Steele alongside Paul Sweeney and John Tucker. Yeah, crude really getting hit by weaker China demand. And we're going to talk about that in the next hour. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, politics, and finance. We are broadcasting to you live from the Interactive Broker Studio right here in rainy Midtown Manhattan. The latest news on the political front is Kamala Harris now has more than enough pledged delegates to clinch the Democratic presidential nomination after just a 2-day blitz that saw the vice president consolidate her party's backing to challenge Donald Trump in November. Want to get more details on all of this with Henrietta Trace, managing partner and director of economic policy at Beta Partners. Henrietta, now what happens? What does pledge delegates mean?
Well, the pledge delegates basically means that the field is clear for Kamala Harris. She will be the Democratic nominee as expected. We will get that confirmed around August 7th. They're going to start virtual roll call voting at the DNC in the beginning of August and carry through until about the 7th when it'll become relatively official. And then we will have the convention on the 19th. Around then, we should get to understand who her vice presidential pick is. So it's really all eyes on Democrats for the foreseeable future.
Henrietta, can you give us a sense of the timing associated with the VP pick? Is there any rush to get it done sooner rather than later as it relates to maybe that virtual roll call?
No, not really. And based on what we're seeing from the Democratic Party right now, and I would think back to, how long it took for President Biden to come to the conclusion that he was going to step aside, the slow approach that Speaker Emeritus Nancy Pelosi took to President Biden, the slow approach that the donors took. This is all orchestrated, not necessarily on purpose, but designed to keep the attention on the democratic process that's playing out in the Democratic Party. Make sure that they're vetting a lot of these guys, the people that they're considering, the governors from the swing states, Mark Kelly in Arizona. These are folks that have very low name recognition outside of their state. So a lot of the vetting process is being done in real time. We're watching it all unfold, and I think it's going to take the remainder of this month and into the beginning of next month. Let's recall that former President Trump announced his VP pick on the Monday of his convention. I wouldn't be surprised if that's the side of timing that we get on the Democratic side as well, which means we've got another couple weeks before we know for sure who it's going to be.
We also keep hearing, these rumors that Republicans are talking about, we're hijacking democracy here. This is not democratic, which leads me to think, are we going to see lawsuits in relation to Kamala Harris being on the ballot? Are we going to see lawsuits concerning the campaign funds? Are we going to see lawsuits preventing her from getting on the ballot in certain states? Is all of this just talking points, or is any of this real?
No, these are all relatively frivolous lawsuits. The Democratic Party has until the convention to name a nominee. Once they do, I think the concerns around the democratic process are what you're seeing in terms of slow walking endorsements from former President Obama, from Majority Leader Schumer, from Minority Leader Hakeem Jeffries. This is Democrats trying to explain to American voters through illustration that they're going to take their time and not necessarily have an anointment of Kamala Harris. They chose the direction that I think was the only conceivable conclusion, which was that Kamala Harris, the current vice president, who millions of people have already voted for to go into the White House, is going to be at the top of the ticket. And the endorsement from President Biden really sealed that when he wrote his letter over the weekend. So I think that the direction we're getting from the Democratic Party is clearly indicative of Kamala Harris winning the delegation. There was no real primary, but the process has, been playing out for so long now, even though it's only been a couple of weeks. It feels like an eternity. And I think the Democratic voters, as evidenced by their fundraising numbers, are clearly enthusiastic and happy to have Kamala at the top. There was some morning consult polling that came out this morning showing that Democrats prefer her to be at the top of the ticket. Pete Buttigieg was next in line, but she clearly wins the majority of the Democratic voters. So I don't think there will be an uprising against Kamala from the Democratic voter base.
And let's talk money. I'm just reading your notes here. I mean, like $81 million was raised just in the 24 hours after President Biden endorsed VP Harris here. Give us a sense of the magnitude of the fundraising and what it tells you, I guess, about her candidacy and the support of the Democratic Party.
Man, I mean, the numbers are staggering in and of themselves. They broke Democratic records, presidential records for a 24-hour haul. She's up over $101 million as of right now. But the real data set is the fact that 60% of those donors are new to the 2024 cycle. That is grassroots engagement, momentum, on par with, if not exceeding, what you see on the Republican side in terms of galvanization from Trump supporters. One of the reasons that my odds are 60-40 for Trump right now is because we don't have any hard data from polling to suggest that Kamala Harris has a shot to win in the swing states yet. But the fundraising numbers and the heat map that you see from the Act Blue campaign suggest that those same states that Kamala Harris would need to win are the ones that are donating amongst the highest amounts.
What do you think is going to wind up happening? Like, how do you game out now? Like, what happens in November and beyond? I mean, moving sort of money into any kind of asset class to bet on it now seems crazy. How do you think about it?
I really think that investors should focus on the momentum play. That is the main focus of my note from last night. The momentum story has been with the Republican Party on things that were planned and unplanned. Obviously, Trump winning the first presidential debate, getting a failed assassination attempt was extraordinarily galvanizing. I think it's insane that, that's not the #1 news story of the day. But the reality is, and I talk about this with clients a lot, the Republican momentum came and is now gone. And now it's all with the Democratic Party. And of course, it would be ridiculous to assume in 2024 that there won't be another wrench thrown in the gears here. But for right now and for the remainder of this month and next month going into the DNC, we haven't even gotten to those events yet. So not only is the Democratic Party galvanized in a new way that we haven't seen for 2 years, but the groundswell of support, the pent-up demand is so robust that I suspect it will compel Kamala Harris well into August and then into the critical months and the final countdown of the election into mid-September. What's fascinating is 24% of independents don't decide how they're going to vote until after Labor Day, historically. So even though we're only 100 days out from the election, there's a shockingly large amount of time still left in this race.
What do you think the debate strategy should be for Kamala Harris and the former President Bush? Trump.
We can't go back that far. I think at this point, you just got to get Trump to the stage. I think that if you read his Truth Social pronouncements, he is really definitely attempting to move the needle on the debates. And the question is really whether he shows or not. I don't think it's optically possible for him not to debate the vice president and the ultimate Democratic nominee. That debate is tentatively set for September 10th. Kamala Harris, when she was vice president, has set a couple of dates, the 12th and 13th, if I'm not mistaken, of September for a vice presidential debate. But the Republican ticket hasn't committed to any of those. I think the American public is going to demand the Trump debate Kamala Harris, and I think it would be a material show of weakness if he did it.
Just some breaking news for us, confirmed by AP as well as ABC News. The Secret Service Director, Kim Cheadle, has now resigned. This comes, of course, after the attempted assassination attempt on former President Trump's life. Henrietta, are you surprised by that news?
Not really. I'm surprised that it lasted as long as it did. The Secret Service has come under fire for years now. And I think in the wake of the attempted assassination attempts, which was so shocking to so many Americans, we haven't seen that, in my lifetime, it is really something that required a shakeup at the top. The Republican Party has come out very strongly against her and has been very focused on the Secret Service. There are investigations that they're waiting for with a couple different deadlines, 60 days out from now, for a thorough accounting of what went on. It makes sense that she would resign.
Henrietta Tres, thank you so much. We really appreciate it. As always, Henrietta Tres, she's a managing partner and director of economic policy at Beta Partners, really one of our go-to voices on all things political. And I think we're going to be talking to her very frequently between now and Election Day, because as Henrietta said, there's bound to be more wrenches thrown into the whole process.
And then as an investor, what do? Gina Martin Adams of Bloomberg Intelligence had a great point that said that high tax companies have underperformed low tax companies. And if you were betting on President Trump, you would probably buy high tax companies with the idea that those would be cut, that those taxes would be cut. Therefore, maybe what we're seeing in the market isn't based on the election, but on earnings and fundamentals, which brings us full circle back to a day where we get almost $6 trillion of market cap earnings coming out throughout the next few hours, as well as this morning, which leads us to, see how I did that?
I see.
Yeah.
It all comes together.
Mandeep Singh, Bloomberg Intelligence Senior Tech Analyst, will join us next to preview Alphabet earnings. And now we go to Michael Barr for World and National News.
Thank you very much, Alex, Paul, John. And as you mentioned, breaking news, the U.S. Secret Service Director, Kimberly Cheadle, has resigned. It comes after an earlier attempted assassination attempt at President Donald Trump. We're going to have more on this breaking story as it comes about. Vice President Kamala Harris is making her first visit to a battleground state after locking up enough support from Democratic delegates to win her party's nomination to challenge Republican former President Donald Trump 2 days after President Joe Biden dropped his re-election bid. She is traveling to Milwaukee today. Harris has raised more than $100 million since Sunday and has the backing of Democratic officials and political groups. President Biden is heading back to the White House today, nearly a week after testing positive for COVID. President Biden is ending his isolation at his beach home in Delaware. The president says he will soon give remarks to the American people, explaining his decision to end his re-election campaign. Meanwhile, Maryland Governor Wes Moore has formally backed Kamala Harris to be the next president. The first-term governor, however, says he has no interest in being a running mate if she gets the nomination.
I would do anything to make sure that the vice president becomes the next president of the United States, but I'm not going anywhere. I've said very clearly and very directly to the team that I love my job.
Governor Moore on CBS Mornings. Meanwhile, Donald Trump's running mate slammed the Biden White House. J.D. Vance spoke at a rally in Radford, Virginia.
Now, history will remember Joe Biden as not just a quitter, which he is, but one of the worst presidents in the United States of America. But my friends, Kamala Harris is a million times worse, and everybody knows it.
And again, our top story, the Secret Service Director, Kimberly Cheadle, has resigned. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio. Bloomberg.